also, how will the funding be made for the whole project?
So the balance sheet of AEL is very strong, and we will be looking through funding from the from AEL. It is, as you know, AEL is one of the India's largest incubator, and so this will be one of the other project which AEL will be incubating.
And what sort of the collaboration with the OMC will be taken forward, and how will it go through?
So we are working with that. That is one of the part of the MOUs that we have to work with OMC to figure out the security, bauxite security. So there are multiple options that we are working with OMC, and in due time we will tell all the details.
And the link, the agreement will also be...
Of course, part of the agreement, part of the MOU is to have the long-term linkage agreement.
Of 25 years. That
25.
in August is what
We are hoping.
And also, how long the whole project will take, and what sort of an investment will be done apart from what's been already told of 1.08 lakh crore?
So total timeline is around 5 years to complete the project, and so that is the initial investment. And then once we are there, we will obviously looking at, once this is set up, then we will look at further developments over there.
And any more plans to open more projects in Odisha itself?
Nothing immediately right now.
All right, so that was, of course, Karan Adani on the sidelines of the MOU that the group just signed. But moving on to all your stock-related questions, and to answer them, we're now joined by Jatin Geria, VP Technical Research at Teji Mandi, and Avinash Gorakshakar, Founder and Head of Research at Avinash Mentor Research Services, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I'll take the first question that we have is from Bindu, who's writing us from Hyderabad, asking about Cupid. She's got around 1,270 odd shares that she'd bought it at the levels of 86. Wants to know from a long-term perspective, maybe add more, continue to hold, sell. Avinash, any view on this one?
No, I think one can definitely hold on to the stock, because the management has now guided that Q1 for FY27 is also going to be a very strong quarter. And for the overall year, I think the top line growth is going to be in excess of 25%. So I think despite the fact that the stock has run up significantly, the investor has made a decent amount of money. My suggestion is maybe 20-25% can be booked out and the rest can be held on. I think the next financial year, that is FY27, will be another strong year. So continue to hold the rest of the quantity.
Okay, all right. The next one that we have is on AB Capital. Gautam from USA wants to know as to what could be the right entry point to enter into this one. Jatin, what would your recommendation be on the charts for AB Capital?
So AB Capital has broken out of a sideways consolidation. If he wants to enter for a long term, I would suggest to buy on a dip at a support level of 370, where we have the 20-day moving average.
The next one that we have is on Urban Company. Vasant from Hyderabad wants to know whether he can continue to hold the 1,500 shares that he has bought at the levels of 115, or should he book out? Avinash, what would you recommend? Urban Company is what I'm talking about.
No, I think if the investor can hold on for the next 12 to 18 months, Urban Company can definitely be held on. See, large marquee investors have entered the stock and they are continuing to stay invested here. I think mostly these are PMSs, family offices, domestic mutual funds. So I think the shares are definitely being bought by very seasoned investors, and most importantly, the business model is quite robust. But I think to get a reasonably good risk reward, I think you need to stay invested for the next 12 to 15 months.
Okay, the next one that we have is on RateGain. Murli from Hyderabad has bought 30 odd shares at the levels of 425. He wants to know as to what could be the upside for the next 1 year. Jatin, what are you viewing on the charts for this one?
See, for RateGain, the trend is negative. Yesterday we did see some pop-up, but thereafter today it has fizzled out.
Jatin, I'm talking about RateGain, not RateGain. RateGain is the one I'm talking about.
Yeah, so RateGain, the trend is well and truly positive. Now, it has taken out above its previous swing high of 920. So yes, there is further strength that is likely in the counter. 975 is the target area. If he is currently holding, then he should hold with a trailing stop loss at 893.
All right, the next one that we have is on Bharat Cooking Coal. Murthy from Vizag wants to know if from a long-term perspective, is this the right time to accumulate this counter? Avinash, would you recommend that?
Yeah, I think if the investor has a 2-year kind of timeline, he can definitely think of investing. I think it's very close to, or maybe I think below the IPO price. So definitely good value can come in. But today, I think I read some news regarding that output has actually shrunk, and I think the management has clearly said that this drop in volume could have an impact on their business in the immediate quarter 1. So maybe in the short term, the stock will remain little range bound. But longer term, yes, I think at these levels, one can definitely think of investing a little quantity and keep a time frame of at least 18 to 24 months.
Okay, the next one is on Genus Power. Ahmed from Delhi has bought around 50 shares at the levels of 310. Wants to know from a 3 months perspective. He's saying he got it 3 months ago and he wants to know if he can add more from a 6 months perspective. Jatin, would you recommend that?
Yeah, so Genus Power, the trend is well and truly positive. On the upside, I'm expecting levels of 358, 365. So current levels are good levels. It has come down to its previous swing low support. So yes, he can average at current market price.
All right. Okay. The next one that we have is on Balaji Amines. Rajesh Maheshwari from Indore is holding 85 shares at an average price of 2485. From a short to medium term perspective, he wants to know if he can remain invested into this one or exit. What would you recommend, Jatin, on this one?
Yeah, see, Balaji Amines recently has been in an uptrend. So I would continue to ride the up move. I would keep a trailing stop loss at 2,100, and on the upside, I'm expecting 2,400. So continue to hold with a trailing stop loss.
Okay, all right. The next one that we have is on Kirloskar Bros. Ram from Hyderabad is holding 300 odd shares at the levels of 2180. What is the stop loss and whether to continue to hold this one or not? Jatin, I'll stick with you again for this one. Your view on Kirloskar Bros.
See, in the case of Kirloskar Brothers, the support level is at 1850. Yes, the stock has run up, so it's seeing a mean reversion, but overall the trend is still positive. So continue to hold with a stop loss at 1850.
Okay, all right. The next one that we have is on Balrampur Chini Mills. Manav from Mumbai has bought it at the levels of 530. 100 shares is what he's holding. He wants to know whether he can continue to hold this, whether there's a further upside left for this one. Avinash, your view?
Yeah, I think from a longer term perspective, see, Balrampur Chini is an integrated sugar player. They are into ethanol, they are into sugar. And I think the way ethanol consumption is being promoted by the country, plus now the new, introduction of E20 fuel, I think clearly in the next couple of years, I think the business will be scaled up significantly. So I think if the investor can wait in for the next 12 to 15 months, he should hold on. Good value can be made, but from a medium to long term kind of time frame.
All right. I think we've got Shiva who's calling us from Bengaluru waiting by. Shiva, a very good afternoon to you. Go ahead, ask your question.
Yeah, very good afternoon to all. So I have around 2,300 shares of BEL at the price of 419. So want to know around the short-term view, like 3 to 6 months I can hold.
Okay, all right. Jatin, your view on BEL on the charts?
Yeah, so BL has found a triple bottom at the 400 level, and thereafter it's witnessing it's consolidating. But overall, from a short to medium perspective, I'm expecting a move towards 435 to 445 zone where we have some kind of a resistance. So at this point of time, the pattern suggests hold. On the upside, the resistance is at 435 to 445 zone.
Okay, all right. The next one is on JSW Cement. Ekambarai from Hyderabad is holding 200 shares bought at the levels of 130. He wants to know if he can whether he can continue to hold this one or shift to some other cement name. Avinash, what would you recommend?
No, I think JSW Cement is a relatively new player, and I think if the investor can wait for a couple of years, then definitely long-term prospects are good. But if he wants to stay invested in one of the larger players, then I think Ultratech Cement would be a better choice. I think here the company has a larger geographical reach, a better kind of positioning in the market. So I think based on his risk appetite, if he wants to actually invest in a large cap, then Ultratech can be better. But otherwise, if he can invest and stay invested for the next, say, 2 to 3 years, JSW Cement also looks attractive, but only from a long-term angle.
Okay, all right. The next one is from Pakshal, who is writing us from Jodhpur, asking about Trent, whether it's a good buy right now. Jatin, your view on the charts?
Witnessed a sharp up move in the last series, and I suggest to wait for a dip towards 3150, 3200 odd levels and then get in. So the risk reward ratio would be favorable in his favor. So yes, the overall trend is positive. Buy on dip would be the suggestion at 3150 to 3200 levels.
All right, okay. The next one that we have is on IRCTC. Keshav from Chennai is holding 75 shares, bought at the levels of 519. From a 2 to 3 year perspective, is this a good hold, Avinash?
No, I think, see, IRCTC, the biggest issue is that, for their internet booking, I think already they have covered 75 to 80% of the market. And I think the market has not been growing that well. So that's the reason, growth quotient for IRCT is actually significantly slowed down. So I would say that at least avoid it for this, at this point of time. Maybe we can, look at the Q1 numbers which come out. And only once the numbers are out, we get a clear sense and commentary from the management, we could, invest fresh. So as of now, not worth advising investable as of now.
Next one is from Shankar, who is writing us from Bengaluru. He is planning to buy around 1,000 shares of IDFC First Bank and South Indian Bank at the current market price, and whether this is a good time to buy one of those, both of those. Jatin, where is the chart more attractive?
Yeah, the chart is more attractive definitely in the case of South Indian Bank because it's making a newer high, and in the case of IDFC First Bank, it's consolidating. So my sense is that South Indian Bank has a better technical structure. If he wants to buy, then 44 is the level around which we have the 40-day average. So there he can buy at the support level. On the upside, the immediate target that I'm seeing is 52 and thereafter 55.
All right. With that, it's time to slip into a very, very short break, viewers, but don't go anywhere. We'll be taking more questions on the other side, so do stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
watching Ask Profit here at NDTV Profit. It's time for a rapid fire round. Jatin and Avinash, try to keep your answers as short as possible. The first one is on Maruti. Whether the current market price is the right price to make an entry to buy 50 shares, Jatin?
Yes, current price is right market price. Keep a trailing stop loss at 14,000 on the upside. 15,000, 15,500 is the target.
Okay, the next one is on Bajaj Housing Finance. Our viewer has purchased 3,000 odd shares at the levels of 85. Continue to hold this from a slightly long-term perspective, Avinash?
Yeah, I think you can continue to hold for the next, say, 12 to 18 months.
Okay, the next one that we have is from Shrikant, who's writing us from Bengaluru, asking about Kirloskar oil engines. Whether this is the right time to make an entry into this one, Jatin?
Buy it at around 2175.
Okay, the next one is on Apollo Microsystems. Ram Iyer from Mumbai is holding 2,700 shares of this counter at the levels of 211. Wants to know whether to hold or sell. Avinash?
Yeah, I think you can continue to hold. I think next 12 to 15 months, good long-term prospects.
Okay, Siemens Energy from a 3 to 5 year horizon. Is this a good time to buy? Ajay from Gurugram wants to know. Avinash?
Yeah, you can definitely think of buying, in a staggered way. I think definitely from the next 2 to 3 years, this could be a very good opportunity.
Okay, Tata Power bought at an average price of 279. 130 shares is what our viewer is holding. From a long-term perspective, again, Avinash, continue to hold?
Yeah, I think you can continue to hold. Keep a time frame of 18 to 24 months.
Okay, the next one is on EPAC Durable. Soumya from Bengaluru has bought 50 shares at the levels of 251. Average sell, Jatin?
Avoid at this point of time. Trend is negative.
Okay, the next one is on Deccan Gold Mines. Our viewer wants to know whether she can continue to hold this from a slightly long-term perspective. She's bought it at the levels of 189. Avinash, any recommendation on this one?
No, I think keep a 2-year time frame because, I think they've struck gold after a long period. So definitely long-term prospects appear to be good, but keep a time frame of 18 to 24 months.
Okay. Titagarh is the stock that Aniket from Karnataka has bought at an average price of 844. A short-term rally is possible in this one, Jatin. The sector has started to look nice now.
Yeah, see, overall trend is positive. So he can, yes, expect levels of 925, 930 on the upside.
Okay, the next one that we have is coming in from Mr. Rao, who's writing us from Vijayawada. BEL is the counter, 10,000 shares bought at the levels of 453. From a 6 months perspective, Jatin, your view?
The stock name, please.
BEL.
So BEL, it has formed a triple bottom at the 400 levels. On the upside, I'm expecting 435, 445.
Okay, Paras Defense at this price, is it a good buy? Sai from Hyderabad wants to know. Jatin, your view?
Yeah, Paras Defense trend is positive. On the upside, expecting 1400 odd levels.
All right, okay. That brings us to the end of this rapid fire round as well as Ask Profit. Jatin and Avinash, thank you so much for taking the time and helping us all of those stock related queries. But viewers, like I said, it's a wrap on this edition of Ask Profit. But do stay tuned. India Market Close is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों
India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew, and it's a good picture for the Nifty 50. We're trading at 24,140, and remember that 24,100 mark has been a stiff point of resistance. We've moved past that. We're trading with gains of about 0.5%. We're holding very close to the high point of the day. Pull up the intraday chart for the Nifty 50. You'll see what I mean. See, you had a bit of a dip midway through the session, but we've moved up since that point, and we are trading very close, as I said, to the high point of the day. The index that is not working and not doing too much today is actually the Nifty Bank. Pull that up. It's trading in the red at this moment, and we'll get into the internals in just a bit. But just so you know, this is not doing well, but what is doing well, and probably the story of the day, just as it was the story of the day yesterday for completely different reasons, is the Nifty IT. Pull that up onto the screen, and it's held pretty much at the high point of the day, 4.5% gains. Let's look at the intraday, let's look at the heat map for the Nifty 50, because you'll see right on top, 4 IT companies in the top 5. There you go, Infi, HCL Tech, TCS and Tech Mahindra. And Wipro not too far behind with gains of about 2.2%. Bajaj Finserv gaining about 2.5% as well, as Tamanna walks on to set to talk about some of this. It's a pretty good screen, but what you see is apart from ICICI Bank, which is holding with gains of about 1.2%, it's not really much of the banking pack that is doing anything today. But IT, why do you think the bounce back is taking place? Is it because it got beaten heavily yesterday, or is it because of what was said by Palantir CEO?
It's Alex Karp all the way. I mean, Indian IT companies should maybe send thank you bouquets to him, because he's a big buyer of AI services globally, someone whose word is really listened to very, very carefully. And he's in an interview to a TV channel in the US said things like this token tax is just not working. We're paying so much for the tokens that we use for AI, and they're probably just taking all our IP. He's talked about how he says that other CEOs privately are livid about it, but are not saying anything so far because they don't want to be the guy who called out AI entirely. He's saying that if they really can make as much money for us as they're projecting, why aren't they taking a share of our profits? Why are they charging for the tokens? That's the biggest giveaway. So it's a very detailed interview, but nevertheless, that's probably aiding the sentiment that you've seen on Indian IT. Let's pull up the contributors, because Alex is right, it's IT all the way. If you look at the rest of the market, it's not that exciting. I mean, yeah, ICICI Bank is pretty much there.
Because of the weight that it has. It weighs more than, or probably as much as the IT components in the Nifty 50.
Possibly. L&T, RIL, Axis Bank, HDFC Bank on the other side. So ICICI Bank is actually balancing out what its other private sector peers are doing. But let's pull up the sectoral heat map as well and get you a look at what's happening apart from IT. Of course, Nifty IT right up there, 4.5% up. And that's the thing, right, Alex? Nifty IT's got very sharp, huge moves in either direction. It's barely just small and slow and steady. But even after that, they've barely made up for the 30% downtick so far this year on the Nifty IT.
Yes, this morning it was a talking point for Infosys, the fact that it moved to 3 digits.
Back up now?
It's back up above 1,000 again. But what you're saying is absolutely right. And we spoke about this in the India Market Open show, where we said that despite the fact that IT is up about 4.5%, you're not seeing a smashing move on the Nifty 50. In trade yesterday, the index as a whole was down as much as we're seeing the gains today. But you didn't see a big decline for the benchmark, right?
Yeah.
So that is telling in that the market as a whole, yes, okay, it's gone down to where it is right now. It's not going to move the needle on either end, but I would wait to see the print, and we'll know soon enough in the first quarter.
Yes.
Don't hold your horses before you think that this is a comeback of the IT pack. Wait till the numbers come through, because they're not going to miraculously start showing a 7-8% growth.
Yeah, and we saw what happened with KPIT yesterday. PSU banks are not doing too well today. That's down and about. Nifty Energy as well. But even as the worst performing sectoral index, the Nifty PSU bank index is less than 1% down. So you're essentially seeing gains for a second consecutive day, which has completely recouped the losses seen last week. That's one of the key factors that you're seeing today. Resistance levels now at 24,150 to 24,200. Supports at 24,000. And a decisive close above 24,150 to 24,200 could lead to a short covering rally to 24,500. Short covering in IT is being seen across the board. That's mid caps and large caps. SMIDs, small and medium companies, are outperforming the benchmarks for the first time this week, and the Nifty Realty Index is up 5% this week. The bank Nifty is suggesting a technical cool-off, struggling to stay above the 58,200 mark, and immediate supports are locked in at 57,450 to 57,500. On the upside, clearing 58,500 to 58,700 terminates the consolidation phase. That's the bank Nifty that I'm talking about, and this unlocks targets towards 59,500. Vinay Rajani with us this afternoon. We're also speaking to Deepak Shinoy. Welcome to both of you. Great to have you on. Deepak, has IT found some redemption, or it's a today story? You might have someone saying something tomorrow and it'll completely change.
It's too early. I think there's a lot more, information that needs to come. The data on the ground is not very positive. We're not seeing any major change in order profiles announced by IT companies. We're not seeing any. I mean, there are some, but again, few and far between. We haven't seen very good results from most of the IT pack for the quarter ended March. Even the commentary wasn't very positive. So I think, markets tend to, give some kind of choppy moves at all points in time. So I'd wait for this to kind of come back more meaningfully before we would make any longer term assumptions. For now, I guess one day story is a good thing. It's for people who own IT. It's not, we don't have much IT in our portfolio. So I can't say I'm overjoyed, but I think, it's fair to say that their underlying data hasn't yet shaped up. And perhaps it's more narratives driving this, and it's still a one-day move. So I don't think this negates a lot of the, the actual data flow that we've seen in the last few weeks.
Absolutely, Deepak, and a point well made. I guess also on the earnings front, as I was saying earlier, we'll know soon enough. You might actually see a complete reverse of what you're seeing today, and very quickly at that. But Vinay, on the technicals, one would assume that today's move is unlikely to shift the narrative, even on the technicals, right? Because this is a sector that is deeply oversold. For somebody that is sitting on the sidelines and contemplating, okay, is this the bottom? How should you approach this?
Yeah, good afternoon. So 46,100 was the high in Nifty IT index that was seen in December 2024. And from that level, it has come down below 26,000. So yesterday's low was 25,700 odd level. So more than 42-43% correction. And as you rightly said, it is deeply oversold. If I were to look at the purely oscillator that we are tracking on the monthly chart, the RSI for the Nifty IT index reached around 33. So this kind of oversold status on the monthly chart I had seen only in the year 2008-2009. So after that, this kind of oversold scenario has emerged in this IT index. And as we are approaching into a result season, we have seen that in the history that the underlying which has fallen a lot has tendency to recover or show some pullback rally before the result announcement. So I think this is the right time sentiment wise also everybody was bearish on the IT index, and though it has definitely into currently it is into a positional downtrend, but I don't see much downside from current levels. At least we can expect some pullback rally to sustain. Today it has gone up by 4%. Still I am expecting that this further 5 to 8% up move could be there before the result comes for the large cap IT companies. So from here, I would suggest that those who are looking for shorting the IT stocks, they should avoid shorting it. Rather, I think this is the right time to start accumulating the stock, and ultimately we can get good returns in next 2-3 months. So from here, and another observation is that in 2022 and 2023, Nifty IT index went till 26,200, and from that level, major reversal was seen. And recent low is around 26,200, 26,000 only. So I'm a bit hopeful that it has reversed from the long-term support, and oversold scenario is also there. So we can expect some extension in the pullback rally.
Okay, all right. So that's the technical setup for the Nifty IT. But when I very quickly, because I have to jump into individual stocks as well, what is the call in the benchmark right now? It's holding at pretty much the high point of the day. That's one. And what are the individual stocks that you like?
Yeah. So Nifty, because of the IT stocks, almost 80 points contribution is there from the IT in the Nifty stocks, Nifty index right now. And Nifty is the only index today which did not perform well. Today it is giving some good sign. 24,200 is a level for which we are actually waiting, above which the breakout will be confirmed. So it is just few points away from that level. But the way things are rotating, the FMCG and IT stocks have started performing. I'm bit we are bullish on the Nifty, and we are expecting a breakout to come soon. And about 24,200, we are expecting 24,600 to 700 in a short span of time. And 23,800 remains the strong support for the Nifty. So with that stop loss, one can remain long. As far as stocks are concerned, we are bullish on some of the Adani Group stocks. So Adani Ports, which is a part of Nifty, is looking very strong. The stock is trading at its all-time high, and yesterday we saw a breakout from the consolidation. So Adani Ports around 1875, one can go long. 1840 should be the trading stop loss. On the upside, we are expecting a target of 1920 in couple of sessions. The second stock which I like on the chart is the Grasim, which has after a long time it has given some positive move, and the cement and other this kind of stocks have started moving. Ultratech Cement has also started moving well. So Grasim is looking good at 3160. Stop loss can be kept at 3100. On the upside, we are expecting an immediate target at 3280.
Okay, so quite a few calls there. You know, in case you're wondering why the Nifty IT is up and about, like we mentioned, there's Alex Karp to thank. He's the Palantir CEO, who's launched a sharp attack on leading AI firms, including OpenAI and Anthropic, arguing that AI models have been completely and irresponsibly sold. Karp says many enterprises are spending time and resources on AI tokens without seeing meaningful business value, while exposing their intellectual property in the process. He's warned that the gap between AI hype and real-world outcomes is fueling growing frustration among businesses. And, you know, especially the danger he points out to that this AI use is gathering up the moats that companies have, their systems, their databases, their clients, their processes, and then can actually provide it to someone else. That is the fear that's got that Nifty IT up and about. Deepak, I know you said that this can change tomorrow, but just on the basic point which is being made time and again, and Alex Karp is the latest innovator to say it, though not talking about intellectual property, he's the first one to say that, but more and more people questioning the gains that are being promised by some of these AI solutions for enterprise.
Yeah, I think So I think AI is real in the sense of it does provide some layer of benefit. Whether it will eliminate the need for outsourcing was always going to be a question of whether you'll actually do it yourself, you'll outsource it to people and demand that more AI is used in the process. Perhaps the billing formats will change from headcount to headcount plus tokens. And all of these things are layered on by another layer, which is the open source models that are now available, which can perhaps consume a lot lesser in terms of tokens, and perhaps therefore give a little bit of leeway for outsourcers to kind of expand their offerings where they may do some partial low cost and open source tokens and some partial routing into the larger American models. These are going to be discussions and architecture changes that people are going to talk about in the future, but I don't see necessarily that there's going to be any meaningful change in this model that requires tokens for a lot of AI activity to happen, and that monetization for tokens itself is going to remain the path going forward. So I would say at some point this will become commodity, and therefore it's not useful to be a model provider as much as it is going to be a layer above that. So whether it is all this infrastructure that needs to be created around it, the routing, the security, and so on, and also the person who actually manages these, I mean, a company that actually manages the way these models work together, that kind of support will still be required. Whether our top IT companies will be the ones who will take that opportunity, I don't know. I think we have not seen evidence of that yet. Hopefully, they will be able to respond. But it may be just be possible that the new IT companies that come in taking advantage of these, or maybe some of the mid-cap players will go in bigger in these spaces, and there will be a change in leadership. Either ways, I don't expect that the current models will sustain as much as they are in the future. There will be new models as well.
Got it. Okay. It's time now for what I think is going to be a pretty interesting corporate conversation. And in fact, Paisalo Digital in focus on account of the fact that the promoters are increasing the stake in the company. The company has launched a 3-year roadmap as well, as the cost of borrowing has reduced on account of its ECB bond issuance. We've got the Deputy Managing Director, Santanu Agarwal, joining in to talk about some of that. Mr. Agarwal, thank you so much for taking the time. First, talk to us about the interest that the promoters have in increasing stake at this moment. Usually the street views that as something that means that there is going to be an upside to the financial performance going forward. Talk to us about that.
Hi, good afternoon. So, if you look at how we have been doing, about 4 years back, we were at about 26.04% in terms of our promoter equity in the company. From there on, we did a warrant issue, which we converted within the stipulated timeline. And every year following that, we have been doing a creeping acquisition of about 5%. For the current fiscal year, we were able to finish the entire creeping acquisition of 5% within 1 quarter itself. It's primarily attributed to 2 reasons. Number one, the promoter are extremely bullish on the 3-year long-term roadmap that we have laid out, wherein we are doubling our AUM revenue and PAT over the next 3 years. And the second is that we did about 4 quarters back a foreign currency convertible bond of $50 million, out of which about $6 million have been converted, and balance $44 million is yet to be converted, which, if all goes well, we are hoping to get it. We are hoping that it will get converted in the next 3 quarters. So the dilution post that conversion of the promoters will be limited to only about 5 to 6%.
And Shantanu, is there any plan for further stake raises by the promoters?
I mean, I would want to do it, but the thing is, the SEBI guidelines, whether I'm doing a warrant or a pref or a creeping, limits my annual acquisition or increase in shareholding to 5% a year. We have already did about 4.97% for the year, so the only balance that is left for me is about 0.03%.
Yeah, but then, Shantanu, at what point will you be satisfied? Will you do this every year till you reach that 75% mark?
No, I think we are fairly comfortable holding in range between 40 to 50%. at least in conjunction with what the outlook for the company in terms of our long-range strategy and growth targets are for at least the next 6 years. So the 3 years we've already rolled out in the presentation that we did for the full year of the last fiscal year. So I think we'll be happy with about 40 to 50% in the next 3 years, maintaining that same for sure.
Talk to us about this target to double AUM revenue and PAT in 3 years. How's that going to work? What are the levers that you're using?
So, we've been listed for about 30 years now. If you look at about our 30-year journey, for the first 15 years, we were doubling our AUM income and PAT every 7 years. So we had a 15-year compounding cycle. From there on, we went to doubling it every 5 years. So we had a 10-year compounding cycle. And now we are entering a phase where we feel we are going to be able to double it every 3 years for at least the next 6 years is what we are thinking, before going back to the stable outlook of about doubling it every 5 years. So we are primarily basing it on 4 factors. Number one is our transition from a high-tech, high-touch lender to a FinAI-based lender. The second parameter that we are targeting on is expansion of our distribution network. So we've gone from about 32 operating points back in 2017 to about 5,299 touch points spread across 22 states. We have added about 12 new states in the last 3 fiscal years. The third pillar that we are basing it on is our product expansion. We have gone from being a dual product company to having about 4 main categories and having about 8 subcategories beneath them. And the fourth finally is the optimization of the cost of capital. So if you look about 3 years ago, we were at about 12% cost of funds for us. We have brought it down to 10.3% as against the guidance of 10.5%. So a combination of all 4 of these factors are leading us to that doubling of AUM, income and PAT, all the while maintaining the pristine asset quality that we are proud to have.
What is the collection efficiency at this moment? Shantanu, if you could talk about the last 3 months in particular, where certain MSMEs were understood to be under a tad bit of stress on account of the West Asia crisis and the supply chain issues. Did you witness any delinquencies or difficulty in managing payments?
So the primary base of my consumer is limited to small enterprises, micro enterprises, and you say retail side of the population. The primary cause of concern with the West Asia crisis was limited at an OEM or at a large group level, and the government was fairly successful in insulating the micro MSMEs, SMEs, and retail side of India pretty well. Was there a crunch in terms of the incremental OPEX that was being faced at the bottom of the pyramid or at the MSME, SME level? Absolutely. But the government was able to phase it out really well, and was able to provide an environment of stability. Although the scalability part for that side of of borrowers was slightly limited, but at least having a stable environment was able to ensure that we were able to maintain our collection efficiencies. We were able to maintain our NPAs and gross NPAs extremely well. In fact, if you look at our gross NPA levels, we were able to reduce them slightly on a quarter-on-quarter basis to 0.76% and 0.61%. And in terms of the collection efficiency, we went from about a 90. We were close the last entire fiscal year at about 98.5%. So fairly good numbers in terms of everything that was going on.
Okay, Shantanu, I do want to ask about a couple of metrics, which is one, your cost of funds, it's expected to come down further. You pointed to the fact that there's that additional ECB that could come through the next 3 quarters. So what are the implications of that? And the NIMs are already double digit. So what is the upside from here? Particularly from the perspective that we've hit the lowest of the rate cycle, and if anything, at the end of this year, you could see rates go up.
So our entire growth metric is based on a NIM of about that we guided for is about 6.5% and a cost of fund at about 10.5%. As against that, we have overachieved the NIM to about 6.8%, which was about a 43 basis point year-on-year increase. And we were able to bring down our cost of fund from 10.5% to 10.3%, thereby again giving us an advantage of about 20 basis points on a year-on-year basis. So the entire calculation towards the growth is actually taken care of at the current levels that we are at. And that's the same guidance that we continue continue to maintain that for the next couple of quarters, we are going to be staying within this guidance of 10.5% cost of fund and about 6.5% continued maintenance as we move ahead and see what the impact of everything that is going on around us with the RBI opening up the call market for NBFCs and then other regulations that are coming in place and the West Asia crisis finally coming to an end. So how that opens up to the entire space is what we are looking forward to.
Okay, just Shantanu, before we let you go, a lot of your business is now basing its work on AI tools. Just want to understand how it's being integrated into the overall Paisalo strategy, and is it a differentiator for you? Are you seeing any tangible, visible gains?
So back in Q3 of last fiscal year is when we started our AI journey. We were able to capture 2 NVIDIA chips that we started our development process on, and we started guiding on everything that we were going forward to. In 2 quarters itself, we were able to process about 160,000 applications via our AI-enabled onboarding that is running at our branch level. We were able to service about 125,000 customers, and we were able to take care of 225,000 debt management cases. We were also able to completely AI automate about 250,000 credit quality, EWS operations, and admin matrix. We were also able to launch from 0 to about 2 live AI bots, 5 outbound bots. We were able to scale the infrastructure from 0 to about 350,000 outbound calls, 150,000 AI-driven outbound calls. We were able to process 50,000 facial recognitions, 234,000 OCR validations across it. 60% of all new code in the company is now being written by AI. We have 100% AI-assisted legacy maintenance of the systems, and 80% of all test cases and 100% of all test reviews are now being conducted by AI. In fact, as part of our long-range strategy, we were able to also showcase a prima facie screenshots of the upcoming 3 apps that will be revamped again in our branches, public infrastructure, and business correspondent infrastructure, where all 3 will be able to completely access the Paisalo in-house AI systems to do a self-assisted onboarding servicing system, which is completely secure and backed up by our end.
Interesting. All right. So look forward to speaking to you again, Shantanu, when the numbers come through. And exciting times ahead. All the best.
Perfect. Thank you. Thank you so much. Have a good day.
Let's go across very quickly to my colleague Soumit Sarkar. He's been waiting by to tell you about what he's hearing on the street. And Soumit, good afternoon. Quite a bit of traction and action really in the markets. It's looking good.
Well, yes, a lot of individual stocks also buzzing in trade. We'll be talking about a couple of the top gainers in the FNO side. Firstly, it's Sona BLW. The buzz on the street is that a private equity investor has started its due diligence, and post that, dealers indicate that there could be a stake sale that could happen in this counter. One of the parties might exit from Sona BLW, and this due diligence is expected to complete by July 15th. Exide Industries, that stock gained over 7% in trade. There's a buzz of some joint venture tie-up that could be announced soon when it comes to Exide Industries. So that is the reason why the stock is up nearly 8%. That's the buzz on the street. For Blue Jet Healthcare and FDC, there are buy flows on the large HNI and PMS desk. Dealers are indicating that the Q1 numbers are expected to be quite strong for both the counters. Yesterday it was HUL, today it's Britannia, where there are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes are expected to be on the higher side. For delivery, multiple dealing rooms are recommending buy call to their clients. Dealers are expecting a 20% upside from the current levels when it comes to delivery. And lastly, when it comes to Dixon, there are buy flows on the HNI desk. Dealers are expecting strong mobile segment volumes compared to what the street has been estimating, and also compared to what the company had reported in the 4th quarter of FY26. So strong mobile volume is something is the reason why the stock is up nearly 3% odd in trade.
Okay, Soumit, thank you for that. Vinay Rajani, Deepak Shenoy with us. Deepak, just one quick word, even on NBFCs in the entire banking space. I hope you heard a bit of that conversation we had with Paisalo as well.
Yeah, I think so. Overall, we're looking at NBFC data isn't as easy to get as bank data. So overall, we have seen some movements from them in gold. a very big movement in power, obviously, because power, PFC, REC are one of the largest lenders in the space. And then a little bit on housing. Housing hasn't moved that much. And gold, and I think there's gold and that and unsecured loans. To some extent, I think the NBFC recovery is on. There is a 33% increase year on year in NBFCs borrowing funds from banks. That is also quite sizable, and I believe it augurs well for the overall NBFC industry. However, I feel like at this point, the stress points that used to be like microfinance and microlap and so on may see a little bit lesser stress going forward, and we'll see the commentary come in. I don't expect housing to recover meaningfully from the NBFC end. Banks are very aggressive in acquiring and keeping home loans. They're also getting very aggressive in gold loans. So these are two sectors where NBFCs will perhaps underperform. I feel here eventually, as inflation comes down towards the later part of this year, the stress on NIMs, and because the public sector and some more smaller private sector banks are getting more aggressive, you're going to see these NIMs come down because competitively, a lot of better credit will move to the more formalized, larger NBFCs and to banks. And if you're then saddled with not so great credit, it's not going to do well for you in terms of growth. So I think NIMs have to come down, and all NBFCs as they grow will have to bring their NIMs to a much more reasonable level. Overall, next 6 months, I still think the growth is quite decent, at least looking from credit numbers. But for a long-term view, I think you'll have to focus on NBFCs with high NIMs who are actually working to reduce their NIMs so that they can be in a more broader diversified portfolio.
Okay, stay on with us, Deepak. Just quickly want to go to Mahima for the stock of the day. Avenue Supermarts in focus. The stock has been declining for the second straight day amidst increasing competition in quick commerce and higher discounting. Mahima, what's going on with Avenue?
Right, so Tamanna, as you rightly mentioned, it's the second day where Avenue Supermart has seen a downtake and is the top F&O loser on the entire F&O space also today. Now, there are two reasons. The first reason is very well known. We've talked about this, that the quick commerce is giving a lot of competition to DMart, and because of that, the second reason as to why the stock is under pressure is because it's giving higher discount, and this could lead to a large amount of cash burn for DMart. Now, if you take a look at the trends so far that have happened in discounting, overall average discounting has come down to around 15% versus that of 20-21% earlier. Now, this as compared to where DMart discounting stands, it is at around 21 odd percent. For JioMart, it is at around 20 odd percent. For Zepto, it is also at 20%. And Flipkart Minutes, the extra saver part, is also at 20%. So these are the ones which are giving the highest discounts right now. Now, in terms of the counters that are less aggressive in terms of discounting, you have Blinkit and BB Now that give discounting anywhere between 15 to 16 odd percent, and Swiggy Instamart at around 14 odd percent. So Instamart is giving the least discount amongst all of these. Now, apart from discount, what players have started doing is they've started to differentiate the products as well. For example, Zepto is now providing scheduled deliveries, also providing something called swap and save. So they give options between products. For Swiggy Instamart, they've started loyalty partnerships with Indigo and Marriott. They're also providing wallet-linked free delivery. For something like a Blinkit, they're providing shop together feature. So that's a family feature that they give. And for something like a BB Now, they've launched a cafe, which is a similar offering to a Zepto cafe. In terms of Flipkart and Amazon, we've talked about this as to how they are coming in a very aggressive way. For Flipkart, over 1,000 dark stores already they've installed in 130 odd cities. They plan to reach around 1,500 stores in 180 cities by the end of 2026. For Amazon now, around 500 dark stores they're operating currently, and Andy Jassy has said that they are indicating expansion to 300 more cities in the near future. Customer traction has remained healthy. Monthly active users have increased in June. That is something that the Jefferies note is suggesting. Zepto has led in terms of the monthly active users growth, followed by DMart Ready. This is an interesting one, and BB Now. In terms of app downloads, that did slow down in June for these players, and could be a possibility that the app downloads is moving towards Flipkart or Amazon now. In terms of analyst view for Avenue Supermarts, it's very divided because there are buy calls, 10 buy calls, 12 hold calls and 9 sell calls with a return potential of just about 8%. That's the average target price. In terms of valuation, the 1 year forward slightly cheaper as compared to the 5-year average of 86 times, stands at around 71 odd times, but 71 odd times is not cheap for any stock for that matter. So this is the overall view as to, one, of course, Avenue Supermarts being under pressure and the price wars that are happening in the quick commerce space.
Got it. Okay. Mahima, thanks so much for that. So, an interesting space, right? Avenue Supermarts down as much as 3% in trade today. But Deepak, the broader consumption theme is coming back into focus because seemingly several of these companies have managed to push through price increases during this conflict. And especially when there is a scenario of input prices going up, one assumes that the market leaders tend to benefit. What do you think about the play?
So FMCG, you mean?
And broader consumption as well. So you can throw in auto, you can throw in a variety of these things.
Yeah, I think auto's done well. FMCG, I guess we'll know the numbers actually in terms of volume soon. But overall, while I expect consumption to do well in the FMCG space, individual companies may not benefit as much because lots of competition has come in. Distribution channels have changed to this e-commerce and online quick commerce and so on. So there is, that will, I think, impact future revenues and brand moats to that extent. I think jewelry, in that sense, the consumption has come down somewhat. Tourism also, we've seen a massive, fairly large increase in air travel that has probably crimped tourism growth. And to a certain extent, I think the crude falling back to $70 will help if we are able to see reduced prices across the board. But I expect that if input prices come down, which I think for a lot of metals-based and commodity-based players, prices have, I would imagine there will be a reduction in prices also to follow suit, especially in the FMCG and perhaps even at the two-wheeler and four-wheeler end towards the end of this year. This will change the format again. It will probably keep demand relatively high on the auto and consumer durables end. But FMCG, again, the players there's so much competition that I expect price-led competition to also come in quite strongly later this year. And the excuse of higher fuel prices or higher metal prices will not be there, and therefore it will give room to decline. I think long-term India is a good story on consumption. It's just that sometimes you overpay for it. So some of these names that you have in the Indian markets, if you're paying 50, 60, 70 times earnings with 10 to 15% growth, you may not necessarily, get the best of returns from these companies. There are smaller companies, there are even the automakers that seem to be a lot better in terms of valuation and growth perspective in comparison.
Deepak, I'm sure you took a look at some of the banking updates that have come. Do you foresee an exciting Q1 for banking when we see the results in a few weeks?
Yeah, of course. I think there is, for the first time, they'll have trading gains in their mark-to-market gains in their bond portfolios. For 18% profit credit growth, they should have something to show for it in terms of growth in terms of profits. NIMs may not necessarily increase, but they will definitely have something to show for it in profits. The commentary around who is going to raise how much FCNR and the impact on their borrowing costs, I think that is also going to be a significant differential. We're already seeing that yesterday, I think RBI data shows that the system moved from a deficit to a surplus, which means banks have been able to bring in that FCNR, convert it to rupees from the RBI, and therefore not have to borrow from the RBI overnight quite much. We had a period of deficit where banks were net borrowing from the RBI, but today's data shows that since yesterday, there is no net borrowing. In fact, they're parking net surplus with the RBI back again. So that is also going to give us some kind of positive understanding how much which banks deposit portfolios and therefore liability costs will come down by how much. It will be an interesting time finally for some of the banks. The private sector larger banks have not yet performed. So maybe the data when it comes in should show us some positivity for banks after a long time.
Vinay, any favorites in the banking stocks that you have at this point? And do you have any stocks that you've kept in mind for tomorrow's trade as well?
Yeah, so ICICI Bank is the stock which is looking good to me from the private sector. It has been outperforming and still looks good and surpassed the previous swing high of 1380. So looking strong, and I think this can continue. So we can expect some 3 to 4% upside from here in the short term. The stock which I already recommended was the Adani Port. So it is looking good for tomorrow also. So right now the Adani Port is trading around 1880. We can expect 3 to 4% upside in the short term. So Adani Port is on my radar for short term as well as for the medium term.
Got it. Okay. All right. On that note, gentlemen, thanks so much for taking the time. Pleasure speaking with you and look forward to our next chat. All right. We have to slip into a very quick break. On the other side, we'll get you the top buy today, sell tomorrow calls. And, well, we'll close things out for you, get you a lot more stocks that you should focus on. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
the news. Ayush, since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Okay, welcome back. Let's take a look at what markets are doing very quickly. It's turning out to be an interesting end of day, an end of trading day, because we're staying strong. 0.75% up now on the Nifty, or close to the high point of the day. A bit of a leap to get to 24,200, but we've not done badly at all. It's IT pushing the agenda for the Nifty, but banks have not been too shabby either. Rudramurthy VV joining us now on the show. We're also speaking with Pankaj Pandey, Head Research, ICICI Direct. Rudra, good afternoon. Let me start with your Nifty and Bank Nifty view.
Good afternoon. Thanks for having me in the show. See, Nifty is clearly making that attempt to move beyond 24,200 on spot, and that has been the hurdle. And every possibility that yes, it will take off the 24,200 and head towards 25,000. And now if you see even Bank Nifty, yes, that is also consolidating, and we need a move beyond 58,100 on Bank Nifty spot. And again, we are very close to that level. And on a closing basis, once we decisively close above these levels of 58,100 on Bank Nifty and Nifty closing about 24,200, yes, you will see more short covering, and FIIs, once they start participating in this market, definitely you will see more short covering and markets moving towards the 25,000 on Nifty and 60,000 on Bank Nifty. I am bullish on this market, and Brent crude now coming closer to that $70 per barrel, even below the pre-war situation and pre-war time. That is a very, very positive news to us. And once we start the result season, yes, selective sector and stock performance will be seen. So I am bullish on this market, and I will use every dip as a buying opportunity in select sectors and stocks.
Got it. I do want to get Pankaj's view on what's happening with the IT index, Pankaj, but before we do, we have a short presentation by my colleague Jasmeet, who's joining in. Short covering in evidence for the sector today, but Jasmeet, what are you spotting that is causing this kind of up move today?
Well, Alex, thank you for that. As we say, Nifty IT is up nearly 4.5% after declining for nearly 6.5% over last 4 trading sessions, and we see recovery coming in today's trade. And while the gains for today are the highest in last 14 months, showing positive momentum what the sector is going through. Well, this comes in after Karp, who's the CEO of Palantir, comes out and breaks down all the myth about the AI and tells that companies are still token maximizing the AI, which basically means all the implementation companies require integrators who can implement AI into the system. And while companies, when themselves go and get the AI, they end up maximizing their own tokens and burning without getting any actual return. So that's what exactly Nifty IT does. When Nifty IT indicates itself as system integrators, where they imply all those AI models and AI tools across the industry and across the sector. Well, this one statement has led to the overall IT bounce back in the global tech as well as the Indian tech market. Let's quickly look at the chart of the IT companies of how they have performed in terms of the top 5 IT companies. We see the gains coming in at as high as 5.4% for Infosys up until Tech Mahindra as well. Now, if you look at the next chart where we also speak about the overall forming of the IT sector and how it has been moving in the month of May and June, Nifty IT has had a terrible year in terms of the last 6 months. It has nearly fallen 4 odd months or the 6 odd months. If we look at the June month, it's down nearly 9.5%, while the month of May, the downtake was nearly 1 odd percent, and the July has started on a positive note as of now. When you look at the other key aspect, we do make a note that the Nifty IT is currently trading at a 5-year low, given the today's move. It was 5.5 till today morning, but after the up move in today's trade, it's nearly 5-year low, while this has delivered one of the worst first halves compared to 2008, while we see the financial crisis, and then we saw a huge recovery coming in as well. But as of now, it's a wait and watch of how does the AI spans out going ahead. While currently it's down nearly 31% on 6 months basis. We'll look at the other key aspect and talk about the performance of the stock. While TCS to Tech Mahindra, that down nearly 40 to 35% so far in FY26 alone, but Tech Mahindra getting less of beating, it's down about 14%. And when you look at the valuation aspect, well, here the actual story comes up. The TCS to Tech Mahindra trading at a valuation between 14 to 16x, while if you look at the 10-year average, they're currently below that. Apart from Tech Mahindra still trades slightly above the 10-year average, showing the positive momentum and the goal to reach a 15% margin, which is pushing the stock further higher. Now, while the interesting story comes while comparing it to the global tech peers, because companies like Accenture, Cognizant, Capgemini are trading much lower compared to the Indian IT valuation. Well, this comes in after Accenture fell nearly 20% on the weak guidance. So that's the main reason why FIs are still not entering the Indian market as that gone a couple of years ago, because the valuation still seem expensive. TCS was trading at roughly 25 times the valuation before the entire AI tool aspect came in the picture, but now it's trading at 14x, but still expensive compared to the global tech peers.
Yeah, good point. Thanks so much for that, Jasmeet. So therefore, Pankaj, a question to you. A lot of people will look at today's up move and think that it's an opportunity. Do you buy into that? And what are the risks from your perspective of further downside from this point?
Yeah, hi, good afternoon, Alex. Thanks for having me. I think overall, when we look at IT as a space, see, this deflation started from 2025 and is expected to last, say, till 2028. Because at this point in time, most of your tier 1 IT companies have about, say, 5 to 6 odd % contribution coming from AI. Now, for this to become meaningful, you still have 2 years time frame. And I think the challenge is that when we look at the overall innovation which is happening on the AI side, see, the deployment towards enterprises probably can take a bit more longer. So the biggest worry is that this deflation phase can probably continue, say, beyond 2028-29 as well. And that is where the challenge lies. While, yes, from a valuation perspective, some of these stocks are very attractive, down about 30-40 odd % from the 5-year average. In fact, trading cheaper than some of the commodity stocks as well. But I think growth is something which is where the challenge lies, and even it is a bit difficult to sort of figure out whether we are going to see revival in FY28 or FY29. So that is where the challenge lies. So my sense is till the time we don't see prices stop declining, because our sense is that after the price stops declining, we don't expect a V-shaped recovery. So there will be some time correction, which is where things pan out. So
I want to spend time. Sorry for that, Pankaj. I want to spend a little bit of time talking about Bank of Baroda. A lot has been happening in the last an hour or so, but more now so that the business updates are on. Just pull up the intraday chart and here's what's been happening. So the latest is that business updates have come from Bank of Baroda. Domestic advances as on June 30th are at 11.5 lakh crores. That's up about 16%. Not bad. Global advances are up 17.4%. Domestic deposits have grown about 15 odd %. Global deposits have grown about 13.8%, and global business is grown 15.5%. Well, so far so good. Now here's the kicker. They have had an out-of-court settlement with the joint administrators of NMC Health PLC. They have to pay 5,700 crores to NMC Health, which is 3.7% impact of their FY26 net worth. This is why you're seeing that dive in what's happening with the bank. The Q4 net profit of this bank stood at 5872. That's a Q4 net profit, and they have to settle 5,700 crore rupees. Now, a settlement in legal terms means there is no admission of guilt or acceptance of mistake. It's just a settlement. But the fact is that it's a large amount. Now, from the information we have so far, Alex, what the case is about is NMC pretty much went bust. They got bankrupted. And when the proceedings went through, they had a firm called A&M, which was going through it, which leveled some accusations at the role of Bank of Baroda in this. They said that they did not do basic things like KYC, etc. There was a willful negligence of process, which is why this allowed for that money to be siphoned and hence leading to NMC getting bankrupt. That's the broad contours of the case. So Bank of Baroda has taken a hit on it and is down about 4%.
It's a considerable amount of money. 5,700 odd or over 5,000 crore rupees of a hit to be paid out on account of this is a pretty 5,700 crore rupees. So therefore, it's understandable for the stock to be dropping as much as it is because it's going to be a hit that it will have to take. Somit joining in to talk about this in some more detail. Of course, Tamanna has very comprehensively already spoken about it. Somit, what is the genesis of this and why has this come to pass?
Well, it's a 2020 case which says that NMC Health PLC had actually collapsed into insolvency because of some undisclosed debt here. And the agency which had claimed A&M, the joint administrator, that is A&M, was saying that Bank of Baroda knowingly had facilitated this fraud that was done by NMC PLC, and that is the reason why this case was ongoing in the court. And right now, Bank of Baroda has actually gone into an out of the court settlement where they are ready to pay around $600 million, which is close to 5,700 crore rupees, which is pretty much equivalent to 1 quarter profits of the company and around 3.7% of the FY26 net worth. Now, what specifically was said is said by A&M is that they are saying that bank was grossly negligent for failing to follow proper AML and KYC procedures, and they continued processing the payments despite knowing the fact that it was fraudulent, and they failed to conduct proper due diligence on account of sham suppliers used for pass-through payments via fake invoices. In short, what the administrator here is telling is that despite the fact that Bank of Baroda knew that this was a fraudulent activity and the company has been doing fraud, they facilitated the payment and that went through Bank of Baroda, and hence Bank of Baroda was also pulled into this case, and right now Bank of Baroda has gone for an out of court settlement here for this, and they'll be paying close to 5,700 crore.
Okay, quite comprehensively put there. So it's a painful one. You're going to continue to see a plunge in the stock despite decent enough business updates which are coming in for Q1. Pankaj Pandey, any thoughts on this news story as it breaks?
So this Bob story is definitely a surprise because we were not really factoring into it. But I think this company carries a market cap of 1,40,000 odd crores and valued at about one-time book. So I think the market has just shaved off 5,700 crore from the market cap, one-time book. So that is what has happened. And I think, overall business growth looks fine, but somewhere down the line, this kind of incident does not instill confidence. And our sense is that it is going to take some time to sort of get back the overall confidence. Because I think this is something which was not disclosed. So definitely a negative surprise.
Okay, what is? Do you have a pecking order in the PSU banking pack at this moment, and what would it be?
So in the overall, PSU banks, SBI we can't talk about because it's in our compliance.
Sure.
So Bob was obviously the choice, but I think besides that, if I have to look at, then we like something like say Canara Bank, Bank of India. Bob was earlier our pick. In addition to that, probably what we are liking also is the entire lot of tier 1 private sector banks. Because what we are clearly seeing is that the corporate growth or credit growth, which was sort of lagging, especially large corporates, that is sort of bounced back, which is very good for at least large private sector plus PSU banks.
On the technicals, very quickly, Rudra, I just want a quick view on the public bank, sector banks. And of course, Bank of Baroda dropping as much as 4% today. Do you have a stock that you like in that pack?
Alex, very clear view. I will avoid complete basket of PSUs because if you see chart patterns of either BOB or even PNB, Canara Bank, they're all very, very weak, except for SBI, which is just relatively better compared to the other names. So for me, PSU banks are an avoid purely based on chart. There is no momentum whatsoever and they're all weak. Only stock, if you force me to buy from PSU, relative strength is there in SBI.
I won't force you to buy any stock, Rudra.
Then in that case, avoid PSU, Tamanna. Very simple answer.
This is one thing where there's absolutely free choice. Buy or sell at your own peril and at your own wish. Okay, we have an interesting presentation for you. Japan is doubling down on India. Bilateral trade touched a record $27.5 billion in FY26. While Japanese money continues to flow into India.
How many words in Japanese do you know?
I know konnichiwa.
Yeah, arigato as well.
Okay, so thank you and hello.
And what do you say before you eat a meal? Itadakimasu.
Alex will never will never waste an opportunity to show off his vocabulary in all languages.
3 words in a different language.
Including Japan. Not one chance will be wasted. But
3 words.
But let's go across to Parth, who's actually waiting. So here's what's happened. The Japanese Prime Minister is here. Asli story kya hai? Japanese Prime Minister is here. She's met with Prime Minister Modi. A lot of details are expected to be discussed, including trade ties. But Japan already has a lot of business one way or the other in India and in the Indian stock markets as well. Parth has those details.
Absolutely. So the relations between the two countries have been good, and over the past few years they are getting stronger. If we start with the trade data first, in FY24 both of these countries had a bilateral trade of $22.85 billion, which has now grown to over almost $27.5 billion in FY26. Not just trade data, but there's something very interesting in the FDI data as well. Japan is India's 5th largest source of foreign direct investment. If you talk about the cumulative flows from 2000 to December 2024, the cumulative flows of Japanese FDI into the country have been over $43 billion. Japan accounts for over 6% of India's total FDI. So a huge amount of money comes in from Japan as well. If we talk about the year-wise split as well, in FY22, almost $1.5 billion came in, which has increased to $2.5 billion in FY26. Now, if we talk about the investments that Japan has made into India, if we start with the infrastructure one, of course, the list is very exhaustive, but we have got the top names. The first one is the Mumbai-Ahmedabad high-speed rail project, in which Japan has invested 1.1 lakh crores. That's a huge number. Also, the second one, which is the Delhi-Mumbai industrial corridor, where Japan has invested almost 60,000 crores. This is just the infrastructure space. If we move on to the listed space as well, the major of the Japanese investment goes into the automotive sector. The top names here are Maruti Suzuki, JTE KT India, where the corporation holds 69.6%. Maruti Suzuki Corporation holds 58.5%. In Lumax as well, there are other names as well, like Ola Electric, where SoftBank holds an almost 13% stake in the company. Also Samvardhana Motherson, where almost 10% is held by Sumitomo. And this is the automotive sector. If we move on to the next sector, which is the consumer tech, these are the new age companies. These are companies like FirstCry, Lenskart, Delivery, and you will see one name very common here, that is SoftBank. SoftBank has huge investments in this space, and in this space, and these are the recent IPOs. Swiggy, where SoftBank holds over 6%, Meesho, where SoftBank holds almost 9%. If we move on to the next sector as well, that is the financial services, Nippon Life AMC, where Nippon Life Insurance holds 72% almost. In Yes Bank, where SMBC picked up almost 25% stake. And lastly, in the capital goods segment as well, Hitachi Hitachi Energy, where Hitachi Corporation holds over 71%, in Honda India Power, where the Honda Motor owns almost 2/3 of the company. So these are the listed investments that Japanese players have made into the Indian space. Also the unlisted space, we have very big names here like Flipkart and Oyo. Both have attracted investments of over $2.5 billion from SoftBank. Also Unacademy and Snapdeal. Unacademy almost touching $600 million. Snapdeal almost touching $1 billion as well. So these are the biggest names where Japan has invested a lot in India. And with the bilateral talks going on, let's hope that more of these investments keep flowing in.
How many Japanese words have you learned, Parth, in preparation of this link?
I only know one. I think thank you is called arigato.
Arigato. Yeah, there you go.
Please remember to take lessons from Alex.
No, just Alex San. Oh my God! I never thought that I'd be called that. I'm very happy to be called Alex. Alexander, if you must.
Alexander. Okay. All right. Let's go across to Rudra. Good time, Rudra, to ask for your very, very top pick before we close off for the day.
Yeah, see, for me, platform companies look very strong, and today you're getting some consolidation. So I'll be picking two stocks, both from the platform arena. One is definitely Eternal. Eternal, after a good consolidation at around 260-265 zone, has given a clear breakout now, and at current market price at 280 and on dips to 270-275 zones, I will be a buyer. Looking at targets of 325, one can keep a stop loss of around 260 for this long call. For me, again, Paytm looks good, Nykaa looks good, and even delivery looks the strongest in this platform sector. So I'll be picking delivery, buy at current market price delivery, and on dips to those breakout zones of around 490, and look at targets of around 550 to 600 to come on delivery, and one can keep a stop loss of 480 for this long call. So a buy on delivery and an Eternal buy. Also, one can look at Nykaa, Paytm, and the entire sector for me looks very strong, and big move can come even from here.
Okay, fantastic. We asked for Rudra's one top pick. We got a whole basket of them. Yeah. Thank you so much, Rudra and Pankaj, for joining in today on the show. As we're wrapping up, high point of the day? No, not yet. We've come off 24,168. Is where we look like we're closing close to. Let's look at the heat map for the Nifty. Advanced decline ratio is looking robust. You're not at the high point of the day, but you're doing well enough. Infosys is roaring. HCL Tech, TCS, Tech Mahindra. No one wants to be left behind. Wipro also about 3.5% up. This is a tech day, isn't it?
Oh yeah, absolutely. Actually, if anything, the disappointment is that some of the large caps have not really held on. So Reliance Industries in the bottom here, HDFC with cuts of about 0.1%. If it was these two that were going alongside an ICICI Bank, which is gaining about 1.5%, then you'd have seen gains of over 1% for the Nifty.
Can't be too greedy. It's a good day. It's a good day in the market. It's 160 points up on the Nifty. We've had a conversation this morning that is it time for the Nifty to finally perform. But don't forget the Bank Nifty, and let's pull up the Nifty IT. The Bank Nifty has been a little muted, and that's because of the front line stocks over there, but Nifty IT has been the star of the show. Just look at the strength there. That's at the high point of the day, 4.71% up. And let's just pull up the sectoral heat map before we let you go. We'll just quickly go through what's happening. Nifty IT, that story is known, nearly 5% up. PSU banks down. I think one last chart I want to pull up before we wrap up maybe is Bank of Baroda. You called it, Alex. Because what a story there, 5,700 crores. I think Pankaj said the whole amount of settlement, that market cap has been shaved off towards the end, 4.5% down.
Quite likely, yeah. He said that, and it makes complete sense. 1.4 lakh crore rupees, 4.3% off the table right now. It's going to be a big hit. Q4, the entire profit was less than the amount that they're going to pay in the settlement. So it just goes to show.
Yeah, okay. So the business updates of Bank of Baroda were not half bad. More business updates will be coming in. That's going to be one big factor tomorrow. So much to talk about, but that's all the time from Alex, me and the team that put together India Market Close. Thank you for watching. All the action continues on the other side.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin reclaims the $60,000 mark on dovish Fed commentary. JD Vance doubles down on Bitcoin. Taiwan passes the Virtual Asset Service Act. And US SEC launches Project Crypto. There's a very interesting point today. Mythbusters, you have to buy a whole Bitcoin. Actually, you do not need to buy that. Interestingly, just like you can buy fractions of an ounce of a gold or spend cents instead of a full dollar, you can purchase tiny portions of Bitcoin using the modern crypto exchanges. And yes, there is no minimum order quantity. Well, look at that. Each Bitcoin can be broken down into smaller units. Of course, these units are called Satoshis or sats. It's a very interesting thing to talk about, and regardless of that, whether you own a whole Bitcoin or just a tiny fraction, you get the exact same percentage of exposure to its price changes. Now, you can acquire Bitcoin in a few simple steps. Now, of course, remember, choose a reliable and a regulated crypto exchange, verify your identity or connect with your bank account, UPI or debit card. Now, you need to type the exact fiat amount you wish to spend rather than just typing one Bitcoin. Many platforms actually allow you to start with as little as 100 rupees or $10. Now that means anyone can participate without needing to spend thousands of dollars to acquire crypto. Now you can do a single immediate purchase or use a very interesting theme. It's called dollar cost averaging, where you set up automated daily or a weekly, monthly purchases of smaller fractions of crypto. Well, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
PMark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message.
Good evening, you're watching Market Express with me, Shriyanti Singh. Let's get straight to the show and we're going to get you a roundup in terms of everything that has happened in terms of news updates as well as markets. But first things first, let's talk about markets then. Dalal Street extended gains in trade, supported by sustained buying in IT stocks and broader markets. Nifty held firm above 24,100 for most part of the day, while Sensex also saw over 500-point rally also coming in on expiry. Volatility also eased as India VIX corrected over 7% in trade. Moving on then, let's talk about a strong bounce back after days of decline for the IT pack today, and that was the major sectoral story that you were looking at, followed by gains in auto and realty stocks. Meanwhile, energy and PSU banks were the only losers among the sectors today. Let's also talk about IT stocks that staged a strong comeback, like I mentioned, after 4 straight sessions of losses. The Nifty IT index surged over 4%, led by gains in Infosys, HCL Tech, TCS, even as global tech cues really remained a little bit mixed right now. But as you can see on your screens as well, you do have TCS as well as Infosys that did quite well for themselves. And the rebound largely came in as investors returned to some of those beaten down IT names, betting that recent selling had created attractive valuations. Moving on then, let's talk about Vedanta Aluminium that is in focus after brokerage. MK initiated coverage on the stock with a buy rating. The brokerage sees in fact strong upside coming in, backed by a strong positive outlook coming in for the global aluminium demand and the company's improving cost structure. MK also believes that the company is well placed to benefit when it comes to tighter global supply and its ongoing backward integration, which is expected to lower costs and also support earnings growth going forward. Moving on, let's talk about Adani Enterprises that has signed a memorandum of understanding with the Odisha government and Abu Dhabi-based International Resources Holding for a 1.08 trillion rupees integrated aluminium project. And this is a 50-50 joint venture that you're talking about that's being built as India's largest foreign direct investment in the mining and metallurgy sector. When you talk about this particular project, it's going to be including an alumina refinery, an aluminium smelter, and a captive power plant, along with a downstream manufacturing park as well, expected to create over 53,000 jobs and strengthen Odisha's position as a key aluminium manufacturing hub as well. Let's also move on and talk about Delivery that hit a fresh 4-year high in terms of the shares as well. Now, at close, it wasn't doing all that much, but it's the milestone that you're looking at on the back of brokerages turning more bullish when it comes to this particular counter. Analysts, in fact, are seeing up to 19% upside, citing improving profitability. So you're looking at strong operating leverage as well, steady growth when it comes to the company's express parcel business. Optimism has also been driven by Delivery's focus when it comes to cost efficiency and even expanding market share when it comes to India's fast-growing logistics sector as well. Moving on then, let's talk about Exide Industries, and the shares rallied nearly 7.5% at close as well, taking the stock close to its 52-week high. The rally in fact came in after the company announced plans to increase its stake when it comes to the subsidiary as well, and that's by investing up to 1,200 crore rupees. Now, let's talk about this fresh investment. It's going to be supporting the expansion of Exide's lithium-ion battery business and strengthen its presence when it comes to India's fast-growing electric vehicle and energy storage market. Investors, in fact, welcomed this particular move, betting on the company's long-term growth in the new energy space. Moving on then, let's talk about Bank of Baroda that reported healthy business growth for the June quarter, with advances in deposits recording strong double-digit growth. Global advances, in fact, rose about 17.4%, on a year-on-year basis, and you're looking at global deposits also increasing 13.8% to somewhere close to 16.3 lakh crore rupees. The bank's total global business, let's talk about that as well, because it's grown quite decently, 15.5% uptick coming in when you talk about this particular business, reflecting steady credit demand and deposit mobilization. Moving on then, let's talk about tyre stocks that were on a roll with shares of Goodyear India, Seat and some of these other tyre makers, as you can very clearly see on your screens as well, up about 5% thereabout. Both of those counters, and the rally was largely driven by optimism over improving margins supported by softer raw material costs, particularly natural rubber. But you're also looking at brokerages also remaining positive on the sector, by the way, citing healthy replacement demand and steady growth in the domestic automobile market. Moving on then, let's talk about CSM Technologies that had quite the muted debut on the stock exchanges, listing flat at its issue price of somewhere close to 113 rupees on both the NSE as well as the BSE. The lackluster listing was in line with grey market expectations, which had indicated little to no premium, and that's ahead of the debut. The IT solutions provider had raised nearly 146 crore rupees, and that's through the initial public offering. Moving on then, let's talk about Indian social media platform ShareChat that is preparing for its next big milestone, and the company is reportedly targeting an IPO worth about $400 million, and that's next year after turning operationally profitable. The planned listing, in fact, is going to be marking a major turnaround following years of cost-cutting and restructuring. ShareChat is saying that its revenue has crossed 1,000 crore rupees, driven by growth in regional language content and its micro-drama platform. And speaking of IPOs, then let's talk about a global consumer giant that is also looking to tap India's capital markets. In fact, sources are telling your channel that Carlsberg has filed a confidential DRHP for a proposed India IPO. The issue is expected to be worth somewhere close to $700 million, or roughly about 6,660 crore rupees, likely to be primarily an offer for sale, and the listing is going to be enabling Carlsberg's parent to partially monetize its investment when it comes to the Indian business, as global consumer companies really continue to capitalize on stronger investor interest in the Indian market. Moving on then, let's get you some more business news, and Coca-Cola in fact is potentially preparing for one of the biggest consumer sector IPOs in the country. According to reports, the beverage giant has invited investment banks to pitch for roles on the proposed listing of its Indian bottling arm, Hindustan Coca-Cola Beverages. The IPO could raise somewhere close to $1 billion, with the company reportedly seeking a valuation of somewhere close to $10 billion. Presentations by prospective bankers are scheduled in London next week. While you do have, the advisor joining in, Rothschild & Co. also joining in terms of this transaction, the report adds that discussions are ongoing and the timing, structure, or even valuation for that matter of this IPO could still very much change. Let's also move on and talk about India's food regulator that has tightened its scrutiny of the energy drinks market. The Food Safety and Standards Authority of India has issued notices to 6 leading beverage brands, including Red Bull, Monster, Sting, Campa Energy, as well as PepsiCo's Adrenaline Rush as well, over alleged misleading claims. Now, what the regulator is saying is that it's saying that food products cannot make functional or therapeutic claims like boosting energy or improving focus, and that really is the word coming in from the FSSAI. Moving on then, let's talk about a major vote of confidence for India's clean energy sector, and you do have Adar Poonawala's family office that has invested somewhere close to 700 crore rupees in Inox Clean Energy. The investment values the company at 70,000 crore rupees and is expected to strengthen its balance sheet as it accelerates expansion. The fresh capital is going to be issued to fund new and renewable energy projects, expand manufacturing capacity, and pursue strategic acquisitions in India as well as abroad. then moving on, let's also talk about Singapore that has seized a multi-million-dollar luxury home as part of an investigation into the alleged smuggling of advanced NVIDIA AI chips. Now, authorities are saying that the property was partly purchased using proceeds from the illegal trade in servers containing export-controlled chips. The case comes amid growing scrutiny by the way of Singapore's role as a transit hub for sensitive technology shipments. Police, in fact, have also filed money laundering charges against the suspect and also obtained a court order to prevent the property from being sold while the investigation continues. On to some more news and updates. India and Japan are taking that strategic partnership to the next level. As you can see on your screens, you do have bilateral talks with Japanese Prime Minister Sanae Takaichi and PM Modi as well. They've said that the two nations have agreed on a wide-ranging economic security roadmap covering energy, semiconductors, artificial intelligence, and even next-generation mobility. And those were some of the themes that we had talked about previously as well that were outlined in the agenda itself. The leaders also announced plans to co-develop defense technologies and work towards 10 trillion yen of Japanese investment in the country over the next decade, calling Japan an integral part of India's growth story. You do have PM Modi saying that the partnership is built on trust and shared values. It's going to be shaping the future of both economies. Let's move on and talk about the Indian Navy that has foiled a suspected piracy attempt in the Gulf of Aden after warship INS Trikand responded to a distress call from the merchant vessel. And you do have the ship carrying critical India-bound cargo and with one Indian crew member on board came under a suspected pirate attack. And you do have, as INS Trikand really closed in, the suspected pirates fled the area. In terms of the update coming in here, you do have Navy Marcos then who boarded the vessel, secured the ship, and ensured the safety of the crew before the journey resumed. Let's move on and talk about tensions that flared in Manipur's Imphal East district after protesters set a vehicle carrying telecom equipment on fire. In fact, police have said that the vehicle was returning to Imphal after being stopped from proceeding to Kangpokpi, also due to the prevailing law and order situation. And you do have protesters alleging that the vehicle was transporting illegal items, including tobacco products and other intoxicants. Security forces quickly reached the spot and brought the situation under control. Luckily, a case has been registered though, and police have launched an investigation to identify those responsible for the arson. Moving on then, let's talk about Mumbai that remains on high alert as heavy monsoon rains continue to batter the city as well. And you do have the BMC that has issued a high tide advisory warning of a 4.27 meter high tide this afternoon as well. And you do have authorities that have urged residents, especially those in low-lying and waterlogged areas, to exercise caution and avoid unnecessary movement as rainfall and tidal conditions could lead to further flooding and traffic disruptions. Moving on then, let's talk about a massive search and rescue operation that is currently underway in Mumbai after a man was swept into an open manhole during heavy rainfall in Chandivali as well. And the incident took place on Kerani Road, where waterlogging is believed to have hidden the uncovered manhole from view as well. Teams from the Mumbai Fire Brigade and the Civic Disaster Management Department have been deployed to locate the missing man. The incident has once again raised concerns over public safety and monsoon preparedness in the city. Moving on then, let's talk about a hoax bomb threat that triggered a major security scare at the Mysuru court in Karnataka following the threat call. In fact, police, along with the bomb detection and disposal squad and a dog squad, rushed to the court complex and carried out a thorough search of the premises. Now, no suspicious object, in fact, was found, and the threat was later confirmed to be a hoax. Police have now launched an investigation to trace the source of the threat call. Moving on then, let's talk about the first batch of Sri Amarnath Yatra pilgrims as well that has been received at Chandrakote after setting off from the Bhagwati Nagar base camp in Jammu. Earlier, Jammu and Kashmir Lieutenant Governor, in fact, Manoj Sinha, flagged off more than 4,800 devotees travelling in a convoy of 259 vehicles. Elaborate security arrangements have been put in place for the 57-day pilgrimage, which will continue until Raksha Bandhan, ensuring a safe and smooth journey for thousands of devotees. Moving on then, let's talk about diplomatic efforts between the United States and Iran that are gaining momentum. Though direct engagement remains elusive at this point, you do have Qatar saying that positive progress, in fact, has been made on key issues during separate talks with both sides in Doha. Iran has confirmed that no face-to-face meeting took place between the Iranian and US delegations, but both have agreed to continue discussions after the funeral of Iran's former supreme leader. So you do have, meanwhile, US Vice President J.D. Vance saying that negotiations are going extremely well, while also warning that Washington still has other options should diplomacy fail. And speaking of the failure of diplomacy, then Russia has launched a fresh wave of drone and missile attacks on Ukraine's capital, Kyiv, killing at least 17 people thus far, injuring more than 90 as well. And the barrage struck residential areas with a 9-story building, partially collapsing in one of the hardest hit districts. You do have these attacks coming in just days after Ukrainian President Zelensky warned of a possible escalation. Moscow is saying that the strikes targeted military, energy and airport facilities in retaliation for Ukrainian attacks on Russian civil infrastructure. Moving on then, let's talk about Lithuania that is moving to reassess its long-standing ban when it comes to nuclear weapons. President of the country is saying that parliamentary parties have agreed on a plan to remove a constitutional provision that prohibits nuclear weapons on Lithuanian soil as well. And you do have him also stressing that there are no immediate plans right now to host nuclear weapons, but also saying that the change would give the country greater flexibility later if regional security situation deteriorates further. The proposal is coming in amid growing security concerns across Europe. Let's also move on and listen in to a slice of the conversation that NDTV CEO and Editor-in-Chief Rahul Kanwal had with Commerce Minister Piyush Goyal at the Indo-Japan Strategic Dialogue.
America's Ambassador Sergio Gore said recently that this agreement is 99% done. So why don't you explain to everyone sitting here, what is this 1% that is left and how soon do you hope to cross that bridge?
After the IEEMA tariffs were struck down by the Supreme Court, the United States has to find the correct mechanism, a legally tenable mechanism by which they can give us the comparative advantage over our competitors.
All right then, so competitive advantage is something that Mr. Goyal talked about, but with that it's a wrap on this edition of Market Express. Thank you so much for tuning in.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
जीडीपी ग्रोथ 7.7% रही। इतना ही नहीं, पिछले 12 वर्षों में हम भारत में काइजन फिलॉसफी यानी कंटिन्यूअस इंप्रूवमेंट अपनाते हुए अपनी इकोनॉमिक डीएनए को ट्रांसफॉर्म कर रहे हैं। कुछ ही महीने पहले हमने टैक्सेशन, गवर्नेंस और ईज ऑफ डूइंग बिजनेस के लिए नेक्स्ट जनरेशन रिफॉर्म्स किए। हम हर क्षेत्र को प्राइवेट सेक्टर के लिए खोल रहे हैं और कई महत्वपूर्ण सेक्टर्स में इंसेंटिव दे रहे हैं, जिसका लाभ आप सभी उठा सकते हैं। और यही कारण है कि लगातार पिछले 4 वर्षों से जापान बैंक फॉर इंटरनेशनल कोऑपरेशन JBIC का सर्वे दिखाता है कि भारत जापानी बिजनेस के लिए मोस्ट प्रॉमिसिंग डेस्टिनेशन रहा है। आज मैं आप सभी के साथ साझा करना चाहता हूं, मेरा ऑफिस यानी PMO का दफ्तर एक डेडिकेटेड जापान बिजनेस वीक का आयोजन करेगा। इसमें PMO के वरिष्ठ अफसर आपके साथ विचार विमर्श करेंगे, बैठेंगे, आपकी समस्याओं को समझने के लिए और ईज ऑफ डूइंग बिजनेस और बढ़ाने के लिए आपसे खुले मन से चर्चा करेंगे। फ्रेंड्स, आज प्राइम मिनिस्टर ताकाइची और मैंने अपने साझेदारी को और भी गतिशील और गहरा करने का निर्णय लिया है। हमने इकोनॉमिक सिक्योरिटी, AI, डिफेंस, हेल्थ जैसे अनेक विषयों पर एग्रीमेंट किए, जिससे यह पार्टनरशिप फ्यूचरिस्टिक और लिमिटलेस बन जाएगी। हमारी सरकारों के बीच स्ट्रेटेजिक सिनर्जी है, कॉन्फिडेंस है और सबसे बड़ी बात क्लैरिटी है। अब इसे आउटकम्स में बदलने की जिम्मेदारी आप सभी पर है। फ्रेंड्स, आप सबको मिलकर यह सुनिश्चित करना है कि अगले 1 दशक में जापान से भारत में निवेश 10 ट्रिलियन येन के टारगेट को भी पार करे और भारत में जापानी कंपनीज की संख्या भी 10 वर्ष में डबल हो जाए। फ्रेंड्स, मैं आपके समक्ष एक विजन रखना चाहता हूं। मैं एक ऐसा विश्व देखता हूं जहां जापान की टेक्नोलॉजी और भारत का मार्केट पोटेंशियल मिलकर सेमीकंडक्टर, फार्मा और क्रिटिकल मिनरल्स में दुनिया को रिजिलियंट सप्लाई चेन प्रस्तुत दे। जहां जापान का कैपिटल और भारत की एम्बिशन मिलकर शिप बिल्डिंग, मोबिलिटी और क्लीन एनर्जी में नई ग्लोबल लीडरशिप तैयार करे, जहां भारत और जापान के स्टार्टअप से AI, क्वांटम और बायोटेक में विश्व के नेक्स्ट जनरेशन सॉल्यूशंस आए और एरोस्पेस और डिफेंस में अभूतपूर्व सहयोग से हम ग्लोबल सिक्योरिटी में योगदान मजबूत करें। फ्रेंड्स, आइए ट्रस्ट और ऑप्टिमिज्म से भरी इस साझेदारी से म्यूचुअल ग्रोथ और ग्लोबल गुड का मार्ग प्रशस्त करें। जैसे टोयोटा वाले कहते हैं, आइए मिलकर लेट अस गो प्लेसेस। बहुत बहुत धन्यवाद।
Thank you very much, Honorable Prime Minister. Ladies and gentlemen, may I kindly request your attention as their excellencies will now depart the venue. May I kindly request everyone to remain seated and join us in a huge round of applause as they take their leave.
So viewers, that was Prime Minister Modi's remarks during the India-Japan Joint Economic Forum, whereas he said that India can surpass 10 trillion yen investment, and the India-Japan partnership is to focus on the shipbuilding mobility. And also this partnership will focus on clean energy and AI, and that was Prime Minister Modi addressing the media at the India-Japan Joint Economic Forum, which is a big boost, for India and Japan trades. And he said that 12 years have been stronger than ever, and the Indo-Pacific region has been the key focus. And the Japan is to organize business, week, and India will be a part of Japan Business Week. And Japan-India partnership is also, at its prime, and partnership is to focus on the shipbuilding mobility. And I'm being joined by my colleague Rishabh Bhatnagar to give us more details.
Absolutely. This has been a very momentous sort of a visit that has come in from the Japanese Prime Minister, Sanai Takaichi. Lots of very interesting areas of collaboration between India and Japan. A lot of sort of interesting MOUs that have been signed. Number one, of course, being the joint statement on artificial intelligence that has been signed between both the countries. What you also have is the first ever core development pact when it comes to defense. So what India and Japan will be doing together is a naval radio antenna project that they will be doing. Then there's the adoption of the joint roadmap on economic security. And this covers everything from chips to quantum computing as well as advanced materials. Those are all very interesting aspects that have been picked up as a result of this India-Japan partnership. Apart from that, you also have the next generation mobility partnership that has come in. This will cover everything from shipbuilding to aviation to logistics. So there's collaboration on that front as well. What we're picking up is that India is targeting roughly about 10 trillion yen of Japanese investment over the next decade. And what we're aiming for is to double the number of Japanese firms that are currently in India. So those are some figures that we're picking up when it comes to Japanese investment in India as well. There's, of course, going to be continued cooperation on batteries, nuclear energy, as well as green hydrogen. So those are the broad areas of collaboration we'll see coming up with India and Japan.
Right, Rishabh. Thank you so much for that. And in fact, viewers, Petroleum Ministry briefing is ongoing. Let's quickly cut across to that.
Unique technology and output efficient refinery. It also, I think, is important to look at the global context. Today, I think our refining capacity should be in the vicinity of something like 270 million metric tons per annum. We've got several projects which are under implementation. I did a review yesterday of our capital expenditure pertaining to this ministry and the public sector units. And I found that we have different projects, including refineries, which are at an advanced stage. And over the next 6 months to 2 years, they will be implemented. Those taken collectively would bring our refining capacity to about 300 million metric tons per annum. Now, this in and of itself, I think, is a noteworthy and remarkable figure. But if you see that in the context of what's happening in other parts of the world, it becomes, I think, more noteworthy. And let me not go into the statistics of this refinery. I'll come to that in a minute. The first point I would make is that the United States has not had a greenfield refinery for the last 50 years. There's been no new greenfield refinery product in the United States. Insofar as Europe is concerned, my recollection is that they are losing at the rate of 200,000 barrels of refining capacity per day. And I'm sure Rasal's note, which he has given here, will have. Yeah, it's here. It's 0.3. If you look at global refining landscape, yes, the first point is United States, no greenfield refinery for 50 years. Europe, the IEA is sourcing this information to the International Energy Agency, which is Paris-based. It says between 1 and 1.5 million barrels a day of European refining capacity at risk of closure by 2030, which is over 6 times the historic average annual closure rate of 220,000 barrels per day. So that 220,000 barrels per day closure of refining capacity is the current figure. And what the IAEA is saying, that 6 times that amount. From 200,000 barrels per day loss of refining capacity, it could go up to 1.5 million barrels a day. Now, if you look at these figures, and I presume the researchers in these organizations, these are empirically verifiable facts. If 200,000 barrels per day refining capacity is being lost, that's a fact. I mean, you can't, put an interpretation on the figure. But whether the closure from now to 2030 will be 6 times is something you can logically argue. But if that is correct, and if you look at the other global picture, we can see that come 2030, there are likely to be 3 or 4 major refining hubs in the world. And India is certainly emerging. It's probably already the 3rd largest refining hub in the world. So I see smaller tin pot refineries closing down. Global trade in hydrocarbons will be determined and very largely influenced by those countries which have a refining capacity. Now, since we are talking about refining capacity, let me also go into the second of the 3 topics I intended to cover today, which is the crisis post-Hormuz. Why did we do well? I think we did well. We came out of it without any closures, without any dryouts. Please ignore something that you may have seen on social media. These are interested parties which deliberately put out planted news, yahan pe line lag gayi hai, because there's some people think that opportunities like this also provide openings for malpractice and black marketing, hoarding and so on. But I want to put that aside. In a country of India's size, 1.5 billion population, 107,000 retail outlets that we have in the country, not one went dry. During an entire four-month period. I'm taking the reference period from 28 February 2026 to where are we now? We're at the beginning of July. So the entire month of March, April, May, June, 4 months, there were no dryouts. As I said, if there was a supply situation in one area, there are 4 pumps for a few hours, one didn't have. Those are possible any time. I mean, you can have a short circuit somewhere, you can have another problem. But by and large, there was no disruption or shortage or queues. I saw some pictures of queues in a place and I inquired and I realized what has happened. I mean, sometimes even people working in the system try to take advantage by, artificially generating a climate. Arey, band hone laga. I'll give you the example of somebody I know who lives in Gurugram. They live in a multi-rise building and they told me that we've just ordered 5 LPG cylinders. I said, why did you do that? your building has pipe gas. It's a no just in case. Now, this just in case is something that if Pallavi files a story कि shortage होने वाली है, many of you will retweet that story, it'll get 1 million views. It turned out to say that, well, so-and-so told me, so I filed it. So there was a big line somewhere. I said there shouldn't be a line on LPG because LPG booking is done on the online. And I think, Sujata, you have about 98%, 99%. So why should there be any line anywhere? So anyway, I'm going to put through all that. I want to come to any discussion on the energy situation in India, in my view, has to be on availability. And the second of those considerations is affordability. I have looked at the prices which obtained in petrol pumps, and the period I've taken is June 22 to June 26, a 4-year period. The price of petrol in Delhi in June 22, that is 4 years ago, was 96 rupees 72 paise, and in June 26 it's 102 rupees and 12 paise. Now please, 4 years, and the total increase is 5.58%. In diesel, it is 6.23%. So I'm not amused, but I also, since I'm human, I also tend to get irritated sometimes. I'm not angry, but I get irritated when I see दुनिया के crude barrel था 128 रुपए का, वो 70 रुपए पे आ गया है, and when are prices coming down? So my first response to that, price never went up. There has been no increase in prices for the consumer for the simple reason that the Honorable Prime Minister on 3 occasions, November 21, 2021, May 2022 and 10th March 2026, he reduced the excise duty on petrol and diesel. The last reduction in excise duty on 10th March covered 10 rupees a litre on petrol and 10 rupees a litre on diesel. So instead of passing the increase on to the consumer, it is the budget and our system, fiscal system, which absorbed that increase. So please, there has been no increase. So all this regular. So now a legitimate question which you can ask, and many of you are asking, when are prices going to further come down? Now that, again, why I'm so happy to have this and why we have given you so much detailed material. If you have even a nodding acquaintance with the functioning of oil companies, when most of you probably know more about their functioning than I do, then there are several steps involved. Whether the company is in the private sector, and we have 2 of them, or they are public sector entities, which we call oil marketing company, the procedure essentially involves sourcing crude at the point of production through the floating of a tender. Either it's on term basis or on spot basis, but there is a transparent process. Then you buy that, then along with that cost is the cost of insurance, cost of freight, then there is a refining margin, then there is a central excise duty, then there is a state VAT, and dealer's commission, etc.
So that was Petroleum Minister Hardeep Singh Puri briefing about the energy situation in India and how India has really cushioned the situation of the Hormuz and even the prices of the fuel prices as well. And moving on, viewers, Dalal Street has extended gains in trade today, and this has been supported by sustained buying in the IT stocks and even the broader markets. Nifty has held firm above 24,100 levels for most part of the day, while Sensex has also seen over 500 points rally on the expiry. And if we talk about the volatility, so that has also eased as India VIX has corrected over 7% in trade today. Now let me just bring in my colleague Parth for a complete market roundup.
Nifty closes in green, up almost 0.5% today. This was led by Infosys and TCS, both of which were the top gainers. Infosys seeing an uptick of 5.5%, while TCS gained over 4.5% today. On the broader market side, we saw Nifty Midcap 150 performing on a similar basis to Nifty, gaining almost 0.5% today, led by Exide Industries and Sona BLW. Both of these stocks saw an uptick of over 7% today. On the other side, Nifty Small Cap 250 outperformed the benchmark, gaining over 1%, led by Zensar Technologies and MapMy India. Zensar Technologies saw an uptick of over 11%, while MapMy India was up over 8.5% today. On the sectoral side, all of the sectors have closed in green except two sectors, which are Nifty PSU Bank and Nifty Bank. Nifty IT, for a change, was the top gaining sector of the day, gaining over 4.5%, led by Persistent Systems and Infosys, both of which saw an uptick of over 6% today. On the other side, Nifty PSU Bank was the top losing sector, losing almost 0.5% today. This was led by Bank of Baroda mainly because the stock saw a downtick of over 4.5%, and this fall was during the closing hours of the market. On the sectoral trend side, Nifty IT has snapped its 4-day losing streak, while Nifty Realty and Nifty Auto were up for the third consecutive day. Also, Nifty Metal has snapped its 2-day losing streak, while Nifty FMCG and Nifty Financial Services have gained for the second day in a row. Also, lastly, Nifty India Defence and Nifty Oil and Gas have also managed to close in green for the third consecutive day.
Thank you so much, Parth, for that. And in fact, we are switching gears now. India's movie exhibition business appears to be scripting a comeback. After years of pandemic disruptions and OTT concerns, multiplex operators are once again seeing the audiences flock to theatres again. So the Multiplex Association of India is saying that domestic box office collections have surged 21% annually in the first half of 2026. And this has been helped by a diverse content slate and even strong demand across metros as well as smaller cities. But has the industry's business model fundamentally improved, or does long-term growth still hinge on blockbuster releases? Let's find out from Kamal Gyanchandani, President of the Multiplex Association of India. Welcome to the show, Kamal.
Thank you. Thanks for having me.
So, Kamal, you've reported a 21% jump in the box office collections, but how much of that growth really came from higher footfalls versus higher ticket prices? Are consumers, simply paying more, or are we having, are we genuinely seeing more people return to the theatres?
It's a broad split of about 50-50. So there is a 50% growth in the admissions, in the footfalls. And there has also been a growth in terms of ticket prices. So it's a combination of growth in footfalls as well as increase in ticket prices. It's not that the audiences are paying more. It's just that the films which were sort of not performing as per expectations in the past, since 2021, post-COVID.
Right.
More and more films which are mid-level, between 100 crore to 200 crore, those films have started performing in a much more sustainable, consistent fashion, and they tend to have a higher ticket price.
All right.
So it's not like we are charging more, it's just that the films which tend to be a little more expensive are doing better at the box office, and that's contributing to the growth of average ticket price.
Right. So, Kamal, with occupancy improving and more films succeeding across languages, has the industry's profitability recovered to the pre-pandemic levels? Or are exhibitors finally seeing some sort of meaningful operating leverage there? Or are costs like, rental, staffing and maintenance still weighing on the margins? Because investors really care about EBITDA.
I think you'll have to wait for the operators who are listed, companies like PVR INOX, to come and report their numbers. So, we would not like to speak for individual companies. But at a very sort of high level, I would say that the cinema operators definitely have become much more efficient post-COVID. There has been a sustained reduction in all cost heads, not just rental and occupancy charges, but also on the people cost, the power cost, repair, maintenance, etc., etc. And also with resurgence in numbers, footfalls going up, ticket prices also climbing up steadily, I think almost all operators are profitable. Is the question. I think a better question would be whether we are back to the margins that we had pre-COVID. That I guess you'll have to look at each individual operator for an answer, but definitely as an industry, we are much more healthier, definitely more profitable than what we were last year or the year before that.
All right, all right. So, Kamal, does this kind of demand really justify another round of screen expansion? And how many new multiplexes or screens do you really see the industry adding over the next 2 to 3 years, particularly in Tier 2 and Tier 3 markets?
I think the industry, the multiplex segment, has been consistently adding 600, 700 screens on an average in the last 2-3 years. We expect this number to stay at this level, if not go up. India currently has close to 10,000 screens. Our estimate is that we have a capacity or potential to expand this number to at least 20,000. And obviously, India is not China, so we're not expecting this to happen over the next 2 or 3 years. But we do expect cinema operators to add screens on a consistent basis over the next 7-8 years and take the current number, which is 10,000, up to something around 17.5 to about 20,000 screens. But India continues to offer a lot of potential. We are terribly under-screened. And the headroom to add screens is there for many, many years.
Kamal. So, Kamal, a 21% jump certainly suggests that India's theatrical business is regaining the momentum. And the key question now is whether the industry can really convert stronger box office collections into sustained profitability, and even whether the coming, upcoming release pipeline can really keep the audiences returning to cinemas. Thank you so much, Kamal, for joining us today, on our show and sharing your insights.
My pleasure. Thank you.
Okay. So viewers, let's turn to Bengaluru now, where a deeply disturbing incident has put the spotlight on child safety. Toddlers between 2 and 3 years old were made to sit in the drum of a front-loading washing machine, water sprayed into their mouths with a toilet jet spray, and locked in bathrooms. And these were the inhuman punishments meted out at daycare center on the Capgemini campus, which has been shut after backlash over abusing children, which has surfaced. And FIR has been filed against 5 women of the daycare, and probe is underway. With that, viewers, it's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew.
markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, and also if there's the alpha possible or not, I get you all of them. But today, it's a very interesting company and first time it's coming in KYC. But try to guess it before we start. The first hint is it's the largest stainless steel wire manufacturing company in India. Interesting, right? Let's take another hint. Try to guess this. This stock was recently listed, you could say it's just been 1.5 years, on July 10th, 2024. Let's talk about the price movement also. And recently there was a block where Malabar Fund, Invesco Mutual Fund added, and of course this happened last week itself. Also, the stock is up almost 60% from March lows. I'm sure you must be guessing it by now, but the entire picture is, it's of course a wire company. That's the second part of the name as well. Company ka naam hai Bansal Wire Industries. This is the company which we are talking about, but why are we calling this company? What is so special about it? Try to understand that. The first question definitely is going to be on the FY27 outlook. Company is quite bullish on the ROC business going ahead and the cash flows improving as well. And this is a very good sign when the company is talking about numbers. The growth guidance for their high margin business as they're shifting from a commoditized wire to the specialized wire segment. Of course, there will be capex and expansion. We'll try to understand that story as well for Bansal Wires. And also, an important question to be asked would be, have the disruptions bottomed out? They had mentioned that in fourth quarter for both production and sales. Is that turning around? And of course, there might be an escalation cost hit in the first quarter. So these are the key questions we'll try to ask Bansal Wire, and of course the demand trends and client confidence, and the management would be coming in and he'll be speaking. Pranav Bansal, the MD and CEO, Bansal Wire Industries. Of course, it's a young generation, so it'll be pretty interesting to have this conversation with Pranav. But let's understand ye dhanda karti kya hai, Bansal Wire. It sounds quite simple, but is there something more to it? Of course, the company is a part of Bansal Group, which started in 1938. So they have a good standing in the market. This is the largest stainless steel wire manufacturing company. And if you go into more details, it's the second largest in terms of volume as well. And of course, this is the India I'm talking about. So they have a 7% market share. तो इस धंधे में अगर कंसोलिडेशन आता है तो इनको सबसे ज़्यादा बेनिफिट देखने मिलेगा. This of course caters to automotive, general engineering, infra, hardware and other sectors also. So there isn't much sector concentration as such, and I'll explain you that why this is important. And these are the other segments also where the company is giving services. Also 5,000 plus customers, 3,000 SKUs and 5 manufacturing facilities they have. Of course, the one mega facility in UP is also there. They are expanding into specialty wire segment, and इसमें भी अगर segments की बात करें तो bead wire, hose wire, IT, OT, steel cord, these are the special ones. That means high margin and even better ROC numbers can come from here. The manufacturing capacity is roughly 6.8 lakh million tons per annum. So of course there is a big capex barrier also when it comes in. Our company did a very interesting 5 Porter Forces model also, and so rarely I see that in investor presentations. Recent block deal, look at that, 3% stake, minimum public shareholding, 78% अब 75% stake आ गया है. And the buying has been really strong. HDFC, Invesco are there, but look at this name, Malabar India Fund. That's a pretty interesting fund, to be honest, taking a position in this company. But let's look at the other side of the story as well. How's the industry presence looking like? And it's equally distributed. There's no concentration of more than 25% in a sector. There's automotive, general engineering, infra, hardware. So you see there is a proper 360-degree kind of a diversification at play when it comes to the industry they are having exposure. So that's a good portion. Volume trends, that's pretty interesting. From June 24, I have taken this date because that's the time when the listing had happened. From there has been a serious improvement in the volume for their core business as well as value add. Look at that, the growth has been pretty strong. So these are the volume trends coming in for the stock. But what may work for the company? कैसे जो है stock के लिए positive pointers है ये strong buying from institutions, especially from DIs. They are lapping up big positions here. The focus is on higher margin products, and we'll try to understand, this entire picture about it and how does it change the financial profile of the company. And that's the next point which comes in. The operational and the financial parameters are improving. Working capital की बात करें या debt equity की बात करें, सारे ratios कम जो है improve कर रहे हैं, if you have to put it in that way. Valuations are attractive from what it was during the IPO and what it is now because there was a correction in the stock. Analysts remain bullish. 5 analysts track करते हैं, 5 के 5 का buy rating आया हुआ है. So this is a reason why it might work. Why it might not work? There are some pointers also. The production and sales disruption due to geopolitical concerns. Is it just going to impact the first quarter or will it cascade into the second quarter? That's the big question. And the impact of rising raw material costs. There is, of course, a little bit of lag, but maybe the Q1 might be hit. So we have given you both the pictures of the positive and the negative side for Bansal Wires, and I've rested my case to you. Let's see the KYC important ratings where we judge a company, and of course this includes income statement, balance sheet, cash flow. We get in the return ratios, especially ROC, and also there are other 4 rating parameters also which includes the shareholding, street trade, valuations. We'll try to do it with its historic data which is there, but याद रखिए सिर्फ 1.5 साल का ही data है because it was listed in 2024 and the outlook as well. Let's start with income statement and see what's happening here, and largely be it revenue, EBITDA, PAT, all of them showing a good 3-year CAGR growth, 20% plus. Now, of course, the EBITDA and PAT is something which has shown a good momentum. So net, the numbers seem pretty strong. The year basis, if you talk about YOY basis, the Q4 numbers are also good. And margins, let's see how things have panned out. And there's a history of the margins, the way they have moved. That was this commodity phase of that 5%. And now we are seeing a sustained 8% margin outlook coming in as they are focusing much more on the value addition portion. So will it become a 9 to 10% margin business? That's what we need to understand and ask the company. But as of now, it's in an uptrend. So I'm going to give this a thumbs up. Let's talk about balance sheet. I had mentioned you that the debt equity ratios are coming down. And look at the borrowing. That's also down, at around 552 odd crore rupees. It is a high working capital business when you anytime analyze these type of businesses. So as of now, the bank balances are not looking that favorable. It's pretty decent. So it has been put in a good manner when it comes to the management. So it's a thumbs up when it comes to the balance sheet. So income statement was good, balance sheet was good, but cash flow, is there a little bit of lumpiness at play? That's the question to be asked. But for the last 2 years, FY24 and 25, it was negative. That has turned positive, and this is a good sign for FY26. Net cash flow is largely flattish, and a good conversion has finally come in when it comes to Bansal Wires. So debt equity ratio improving and your cash flow is improving, and that's a healthy sign for a company to be analyzed. So I'm going to give this a thumbs up as well. Apart from the basic numbers, let's talk about return ratios. And for a business like this, 15% is the average you should expect, and the company is doing that. But the company has made a big claim, of 27% ROC, which I'll of course explain you those numbers, but it has held its ground. Now, when does it go up? That's something we need to watch out for. So as of now, let's keep it neutral when it comes to the return ratios for the ROCE. Shareholding, of course, from March 25, March 26, the numbers are there. Remember, there's a caveat. Promoters recently sold a block, and now it's at 75%, and the remaining 3% have been totally absorbed by the DIs. FIs, no major exposure yet, but look at DIs. 16% stake it was there. Now it's 17%, and of course, when the numbers come out, for the June, this number is going to be 20%. So DI's favorite stock, Bansal Wires. So it's a thumbs up when it comes to shareholding. Street cred is something we need to understand, but take it with a pinch of salt, because सिर्फ 18 महीना का इनका history है. From the IPO price, it is just flat. So if you have come in the IPO, technically you haven't made money yet. That's a little bit of concern. But of course, on a short-term basis, from March lows, the stock is up 60%. Concern coming from 2025 high and 2024 high. These highs I have taken, it's still down. One is down 24%, another is down 14%. So a lot of mixed, reviews coming in. If you are a trader, you made money. If you are a long-term investor, or maybe from the IPO, well, you need to wait more, I guess. So it's a neutral rating for street cred as well. Let me get you the valuations and understand how this dynamics work. The 2024 peak, during this IPO, there was a big craze, momentum was there. Maybe there was industry tailwinds also, sentiment was good. But after that, the sentiment kind of peaked and then it came down. The average is 26 times in the 2 years I have taken. These are the 12-month forward P ratios, and currently it's evenly priced at 25 times right now. Whether it's quite cheap or not, that I'll let you decide that, because as of now it still looks neutral to me and not very attractive in terms of valuation, because the perception has changed of the market, what was there in 24 and what is there right now. Let's look at the outlook and see whether the story changes or not. Largely, they are decommoditizing their product portfolio, and this is coming through the specialty wire segment. That's what you're seeing, an up move in their margins. A 600 crore plus positive operating cash flow. That's a very important statement from the company. That given that in the fourth quarter, and 25% ROC. Current ROC numbers, if you look at it, it's at 15 to 17. So that's a very significant jump, something which they are targeting. But how does that happen? That we need to ask the management. And lastly, the production and sales. Is there impact happening due to disruptions? And of course, the rising costs. That's also a big question to be asked. But right now, let's give it a neutral rating. With the long-term story looks strong. Short-term, there is volatility. But let me give you the entire picture for the KYC ratings. See, company की पूरी rate card या report card क्या है? Let's talk about it. These three basic numbers are really strong, at least for the company or the industry which they are in. They're a market leader. So the market share gain benefits is always there for them. Let's look at the other key rating parameters, and a concern definitely is little bit there on the street cred, especially for the IPO shareholders. I understand that, and that's the reason why I have called this company also to understand what's the next leg of the story of Bansal. Wires shareholding is pretty strong as DIs and smart money are lapping up. Technically, they are buying the company currently at the IPO price, at least in the recent block. So the total rating parameter for Bansal Wires, please note it down, it's 6 out of 8. It's largely better than the average numbers which we generally give in KYC. But let's try to understand what's the next story here. And that will be done by Pranav Bansal. He's the MD and CEO of this company. But interesting tidbit about him, of course, he's a new gen entrepreneur. He joined the company in 2015 and he became the MD as well as the CEO in the year 2022. We are joined in by Pranav Bansal, the MD and CEO at Bansal Wire Industries. Good afternoon, Pranav. It's always a pleasure to have you. And this is for the first time the company is coming in KYC. I would like to start with the guidances which you have given and the way the changes have happened in your financial numbers. And it seems like there is a turnaround at play. Outlook on ROCs and cash flows, why so better outlook coming in for FY27? And is there a chance of an upgrade now as the global situations kind of sort themselves?
So yeah, I think now after the first quarter or towards the end of the first quarter, I think we have now back to normal. So we are back on our target of 20% growth. Of course, we have done a lot on ROCs and cash flows. Those are definitely getting better. Our target for this year for ROC was about 350 crores, and last year was 250, against which we did 330. So this year, we should also be in a similar range. We should go to about 400 crores in cash flow this year, and ROC definitely will improve. Our long-term target for ROC is 25%, and we will get there.
Right, but give me a little bit of explanation in detail about the high margin business, the way you are moving towards the high margin wire segment. What's the growth guidance looking like, and is there any more details to that?
Sure. So in the first quarter, we have actually got our first trial order of one of our main products, which was steel cord in the specialty wire vertical. Those are the high margin businesses that we are discussing. We've been working on this for the last 2 years. We've set up a pilot project of steel cord about 2 years back. So this has been a good breakthrough. Once this goes, there'll be 2 to 3 stages after this, and we will be looking at commercialization. Once we do that, we are looking at a 2 lakh ton kind of a target that we have, and we should get there. This is a good potential product. This will take our company to a very different level.
Right. Of course, these products we talk about, the ROC numbers you have given, they are moving towards the high margin portions. But let's just understand, there are so many categories you are having exposure to. Just wanted to understand what the demand trends and the client confidence looking like, and which other categories which are actually showing a really good demand. There are like 7-8 categories which which we are tracking right now for Bansal Wire. So Pranav wanted to get some light on that as well.
Sure. So as a strategy, we have a de-risking strategy for at least our customer centralization is that even today, if you look at our numbers, we have about 5,000 customers. The largest customer that we'll have is less than 5% of my total sale. Similarly, we are there in a lot of different industries like automotive, general engineering, infra, and no industry for me is more than 25% of my total sale, which is a strategy that has worked well for us. And this is the reason why we have been able to consistently grow at 20% in the last 20 years also. And this is a main strategy that we'll follow even for the coming years. Today, after the first quarter, I would say that, almost all our industries are back on track. Automotive has been doing well even in Q1, but other industries like general engineering, hardware, consumer durables, even those industries we are seeing a good demand from. And this is what gives me confidence of a 20% growth even this year, at least for the last 3 quarters.
Right. So just talking about the first quarter, which is just about to be over, or it's actually over, there was a little bit of concern on the rising escalation costs. Now, explain me the model. It is going to be a hit in the cost this quarter. I don't want any numbers from you. Or is there any kind of, cost pass-through also, or does it come with a lag?
Yeah. So as a strategy, we already operate on a cost plus model, wherein any increase and decrease that I get in my raw material is passed on to the customer. Therefore, that way we are safe. But yes, of course, in Q1 we had a different degrees of other consumable like gas, which has been passed on with a 35 to 45 days lag. So as a company, we took a decision not to pass on any increase and decrease in the confirmed orders. Therefore, there's a lag of 35-40 days, which was over by, let's say, 15th of May. So after 15th of May, I would say that we are back on our regular EBITDA margins.
Fair enough. So a little bit of a margin impact might be there in the first quarter. I'm just doing a little bit of maths and just trying to explain. But can you explain me the capex and the expansion plans? Because of course you will be generating a good cash flow as at the end of FY27. But with that cash flow, planning to deploy anything in capex or looking at any ancillary acquisition around your industry?
So to understand this, what we have done in the last 1 year is that we've changed our complete strategy in terms of cash flow. As a company, we have never been a cash generating company. But last year we generated about 330 crores of cash. This is to create a self-sustaining business model wherein we are able to grow at 20% with our own internal accruals. So even for example, this year we require about 2 to 250 crores of capex to be done to grow at 20%. More than that, we will get from our internal accruals. So as a company, we should be able to grow at 20% by investing 200 to 50 crores a year through our own accruals.
Fair enough. And the way the product which you are in, you are literally a market leader with almost, 7% market share coming. Any kind of targets which is coming in, because a lot of, geopolitical issues happened domestically. Also, some of your unorganized competitors did close down. That's what my channel checks suggest. Are you looking at market share gains right now?
Yes, definitely. I mean, the industry in which we are in, although it is a very big and a large industry and it grows at about 7-8%, but as a company, we've been growing at 20%. So every year, our thought process is to gain market share. This year, as well as the year after this, this is the strategy. And because we've been in this industry for about 85 years now, so we have a lot of experience. Our customers knows us, the segment knows us. We have a lot of infrastructure positivities ecosystem that has been developed. So it is, I think this is one of the reasons why we've been able to do this, and we will continue doing this.
Pranav, now since you have, quite old setup, established player you are, also now the cash flows are improving. Is it the right time to talk about the R&D, the strategic tie-up, or getting a global player on board with you? Because I feel like the company might go to the next level with that. Is there any views on that now, Pranav?
So honestly, we do almost all specialized products that there are in this industry. The only one product that was left was steel cord, which we have now started. And for that also, we do not have to get into a technical tie-up because we have a good R&D setup already. We invest heavily in R&D every year. Even this year, we came out with 200 new products for this year alone. And this is our target. Our internal target now is to come out with 20 products every month. So that's about 250 products a year. So honestly, I think we are good on that part. We already are the most diversified. So being all of this, we still have 7-8% market share, which means that we have a long way to grow even in this industry in the current products.
Fair enough. You have given us a full 360-degree angle on the entire setup of what Bansal Wire is, which industry they are in, and maybe the future, how it looks like, and of course the short-term basis also. Entire picture has been put. Thanks a lot, Pranav, for your views for the company and the industry as a whole. It was a pleasure to have you at NDTV Profit. So that's the management of Bansal Wires. No doubt we can see a lot of DIs are lapping up, and interestingly the stock's IPO price is near its IPO price. So maybe valuations might be attractive. So interesting stories like this. Stay tuned to KYC and keep watching NDTV Profit.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights.